Good morning, everyone. So, in our last session, we started with section 9. In section 9, we completed section 9.4 and 9.5. 9.4, promoter or builder who is making inward supply from a unregistered person. And 9.5, supply of notified services through an e-commerce operator. Liability to pay GST is on e-commerce operator. Now, we are going to discuss 9 subsection 3. That is, there are some list of services so which are notified under notification number 13 of 2017. With respect to those notified services, notified goods we don't have for syllabus, notified services only we have. With respect to those notified services under notification 13 2017, liability to pay GST is on recipient. That is 9 subsection 3. So whenever we are referring to 9 subsection 3, we need to give a reference of one notification. What is that notification number? 13 of 2017. Just write down there, notification number 13 of 2017. So therefore, whenever you are giving the justification as per section 9 subsection 3, read with notification number 13 2017, like that we need to write. Okay. Now, so there are total like Sir CG got salads, like these are the list of services. With respect to this list of services, liability to pay GST is on the recipient. Now first we need to remember what is the service, who is the supplier, who is the recipient, and what are the conditions for RCM. Thereafter, after completing this, then we will link it with the exemptions. Okay. So first we are seeing what are the list of notified services under RCM. First one is security lending services. Security lending service, who is the supplier of service? Lender of securities. And who is the recipient of service? Borrower of securities. Say for example, I am lending the securities to you and you are borrowing the securities. So how this lending and borrowing happens? This will happen through stock exchange. Okay. So intermediary, stock exchange, through stock exchange. Directly you will not know me, I will not know you. But this particular transaction will happen through a stock exchange. So therefore, why you will be borrowing the securities? Maybe you will place a sale order and the order gets executed and you need to deliver the shares. If you are not delivering the shares, then you will have a huge penalty. You placed a sell order, but you don't have those shares in your demat account. So now you need to definitely deliver that shares. For the sake of that, you will temporarily borrow the shares from me and you will complete the delivery. And once the delivery is completed, at a later point of time, you will place the buy order. You will buy those shares and you will replace those shares. Just like, I have some commodities, you are taking the commodity on rent and you are returning that commodity, just like that only. Okay. So in case of this borrowal, so you have to pay me a lending fee. On that lending fee, I will not pay GST, you will pay GST under RCM. You understood the first service? What is the first service, pa? Security lending services. Who is the supplier? Lender of securities. Who is the recipient? Borrower of securities. Borrower of securities will pay a lending fee. On that lending fee, GST payable under RCM. Is there any conditions for this RCM? No, that's it. This much only you need to remember for the first transaction. Done. Then second transaction. Second transaction is import of services. All these list of services are with a keyword. So Sir SIRR CG got salads. In that yes we completed. What is yes? Security lending services. I for import of services. Import of services. So who is the supplier? A person located outside India. Who is the recipient? A person located in India. And liability to pay GST is on the person located in India. Is there any conditions for RCM? No, we don't have any conditions for RCM. Is there any non-applicability of RCM? Yes. In one case, import of service will not come under RCM, it will come under FCM. That is, import of OIDAR services. OIDR means Online Information Database Access and Retrieval Services is known as OIDR services, which means a service which is mediated through internet and it is automated is known as OIDR services. Example, you are streaming in OTT platforms. Lot of OTT platforms are there today. So Z5 or Hotstar or Amazon Prime, Netflix, like this. These OTT platforms and all will come under OIDR services. Why? Because is it mediated through internet? Without internet, can we watch? No. And it is automated, anytime we can watch. So therefore that will come under OIDR service. Suppose if I am taking online live classes, will it come under OIDR service? No, it will not come under OIDR. Why? Even though it requires internet, but so it is not automated. If I am not there, you will not be able to attend the class. So therefore it is not OIDR. Suppose if it is recorded classes, if I put in my app, and if you watch it online, so then will it come under OIDR service? Yes, because it requires internet and it will be automated. So that will come under OIDR service. Same way, you download a mobile game and you play that game. So will that come under OIDR service? Yes. So because that some games requires internet. Without internet you cannot play the game. There are many such games, okay? Call of Duty or Sniper 3D, these games and all. So you definitely requires internet. And it is automated. Suppose if it is like some other person is required, like Minecraft or some other games, wherein opposite one person is required, so then only we can play like that. Collaborative gaming, even Rummy Circle, online Rummy, etc. So will it be coming under OIDR? No, because it is not automated. It requires internet, but it is not automated because we need an opposite one person to play the game. So therefore, now you understood what is OIDR service. What is OIDR service? Full form: online information database access and retrieval services. In case of OIDR services imported by non-taxable online recipient, it will not come under RCM, it will be FCM. Generally import of services RCM, but exception, only one case, import of service will not come under RCM. What is that? Import of OIDR services by non-taxable online recipient. OIDR service means a service which is mediated through internet. Somewhere you write down there, OIDR service means a service which is mediated through internet. OIDR service means a service mediated through internet and is automated. A service which is mediated through internet and is automated. A service which is mediated through internet and is automated. Okay. Then who is non-taxable online recipient? Any unregistered person. Any unregistered person importing services for other than business or commerce is called as non-taxable online recipient. For example, you are subscribing for Netflix and say you are paying 199 rupees per annum. Per month, okay. Per month, because now I am not watching in OTT, I will watch in Telegram, so that's why I don't know. So therefore you are paying that 199 per month and you are subscribing for Netflix. Now, is it import of service? Yes, it is import of service. Now, you are importing it for personal purpose or for connecting it in projector and playing a movie and all. Personal purpose, correct? Other than business or commerce. So you will be coming under non-taxable online recipient. Therefore, in this case, liability to pay GST is not on you. You are importing service, not on you, but on the supplier. Who is that supplier? Netflix. So they have to pay GST under FCM. Understood? So now, what is the first one? Yes for security lending. In security lending, who is the supplier? Lender of securities. Recipient, borrower of securities. So borrower will pay GST under RCM. Then I for import of services. Supplier outside India. Recipient in India. Liability to pay GST is on recipient. Exception, only one case. OIDR services by non-taxable online recipient. Good. Then R for renting of motor vehicles. In case of renting of motor vehicles, so who is the supplier? Owner of the motor vehicle. Who is the recipient? The one who is taking the motor vehicle on rental basis. And RCM will be applicable if three conditions are satisfied. condition number 1, supplier should be other than body corporate and recipient should be body corporate and the rate of GST is 5%. If these 3 conditions are satisfied, then only it will come under RCM. Supplier should be other than body corporate, recipient should be body corporate, rate of GST 5%. Who is a body corporate? Body corporate means private limited company or public limited company or body established under any law for the time being in force. RBI body corporate, yes. SEBI body corporate, yes. ICI body corporate, yes. You understood. Any body established under any law for the time being in force is called as body corporate. Somewhere you write down. Body corporate means private limited company or public limited company. Body corporate means private limited company or public limited company or body established under any law. Or body established under any law. Private limited company or public limited company or body established under any law is known as body corporate. Okay. So, supplier should be other than body corporate. Recipient should be body corporate. And what should be the rate of GST mentioned in the invoice? 5%. Means some other rate is also there. Yes, some other rate is also there. They have 18%, 12%, etc. But all those things we don't have to remember because rates and all we don't have for exam. But what you need to know is that if rate is 5%, then only it will be RCM. Okay. So what is that ARPA? Renting of motor vehicles. And who is the supplier? Owner of motor vehicle. Who is the recipient? The one who take motor vehicle on rent. Conditions for RCM? Come on, please respond. Supplier other than body corporate, recipient body corporate, rate of GST 5%. Then it will be RCM. Then next one, next R. Yesterday we already discussed that. Renting of residential property for residential purpose. Correct? To whom? Registered person. So therefore it is what? Renting of residential property. And for what purpose it is given on rent? Residential purpose. To whom it is given? Registered person. Means supplier is owner of the property. Recipient is tenant. And the tenant should be registered. Then only it will be covered under RCM. Is it residential property or commercial property? Residential property. What if it is commercial property? It is not covered under RCM. You understood? So only residential property is covered. That is R. That is an amendment. Renting of residential property for residential purpose to a registered person. So RRR. You remember this. Okay. Then next. Not that I am a fan of that movie and all. So because it got Oscar and all. So therefore we can remember. Ultimately we need to remember some way to write the exam. Okay. Then next. Copyright services. Copyright services means temporary transfer of IPR. Temporary transfer of IPR. So will be coming under RCM with respect to 4 IPRs. What are those 4 IPRs? So original literary. Original literary. Original literary means an author who is writing books or novels, etc. So liability to pay GST is on the recipient, not on the author. So then number 2. Dramatic. Dramatic means story, screenplay, etc. That is dramatic. And then artistic, making some drawings, designs, paintings, sculptures, etc. Then musical, that is composing music, background score, etc. So these are the 4 copyrights which are covered under RCM. What are the 4 copyrights covered under RCM? Original literary, dramatic, artistic, musical. Okay, any order you remember, but these 4 are only covered under RCM. And who will pay GST? Recipient will pay GST. Recipient can be any person. Recipient only will pay GST. Usually recipient will be in case of author, publisher or any other person also. And in case of artistic musical works, producer of the movie. So recipient will pay GST. However, in case of that author, we have one option. What is that? Author can opt to pay GST under FCM. But if author opts to pay GST under FCM, there is a lock-in for 1 year, which means for the next 1 year, author only will pay GST under FCM. Understood or not? So therefore, why author will opt to pay GST under FCM? Because whenever my outward supply is covered under RCM, it will be treated as exempted supply for the purpose of availing ITC, which means when my outward supply is covered under RCM, I am not paying GST, you are paying GST. So for me it will be treated like, actually it is taxable only, but for me it will be treated like exempted. So I cannot take ITC on inward supply. Author will have some inward supply now. They will buy a laptop, they will be receiving some DTP services or some softwares, etc. On that, if they want to take ITC, they will opt to pay GST under FCM. But for all four, is there an option, or only for the author there is an option? Only for author. And if they exercise the option for FCM for the next 1 year from the date of exercising the option, they need to pay GST under FCM. So FCM to RCM, is it possible immediately? No. 1 year lock-in period. Okay, RCM to FCM, is there any lock-in period? No. Anytime they can shift from RCM to FCM. But FCM to RCM only, there is a lock-in for 1 year. Understood? So tell me, what is that copyright services you need to remember? Total 4 copyrights which are covered under RCM. What are they? Original literary, dramatic, artistic, musical works. Who will pay GST generally? Recipient will pay GST under RCM. But there is an exception, only one exception. In case of original literary, author can opt to pay GST under FCM for a period of 1 year. 1 year from the date of exercising option. Is that 1 year, 1 financial year, or 1 year from the date of exercising the option? 1 year from the date of exercising that option. Then next one, GTA services, goods transport agency services. In case of goods transport agency services, liability to pay GST is on the consignor or consignee who is liable to pay freight. Okay, supplier is goods transport agency. Who is a goods transport agency? You just write down there. Goods transport agency means any person transporting goods by road. Any person transporting goods by road. GTA means any person transporting goods by road and issues a consignment note. Any person transporting goods by road. So only roadways pa. If they are transporting goods by railways or waterways, we will not call them as GTA. So they should be engaged in transportation of goods by roadways, and they should be issuing a consignment note. Will they be transporting goods belonging to one person? No. They will be transporting goods belonging to different consignors to different consignees. So in that lorry, there will be parcels belonging to different people. All these parcels are transported in a single lorry. So that's how it works. And this goods transport agency service, so GTA is liable to pay GST under FCM or RCM. There are 2 options. So either GTA can opt to pay GST under FCM, or they can authorize their recipient to pay GST under RCM. Now there is an amendment. Amendment I am discussing, concentrate. So GTA can opt to pay GST under FCM, or the recipient, consignor or consignee, can pay GST under RCM. But when they need to decide this, previously with respect to each invoice they can decide. But now there is an amendment. In a financial year they need to decide, and that financial year either FCM option or RCM option. Is it clear or not? Previously they can jump like anything, FCM to RCM, RCM to FCM, like that. But now for one financial year they need to follow either FCM or RCM. That they need to select. In the portal. By when they need to select that in the portal? So prior to 15 days. 15 days before commencement of the financial year. So which means what? Literally somewhere like before March 16th, 15 days. So April 1st is the commencement of the financial year. 15 days prior means what? 15 days prior means somewhere like March 16th or before March 16th, they should have selected the option. Is it clear or not? Then whatever option they selected, that will be applicable throughout the financial year. Now suppose in the question, if they have not given FCM or RCM, because previously what we used to do, if it is 12%, we used to select as FCM. If it is 5%, we used to select as RCM. So previously we used to do that way. So rate 12% given a FCM. 5% RCM like that. But now you cannot choose that way because GTA is having both 12% and 5% under FCM. You understood or not? So under FCM itself, they can pay again two rates. What are the two rates? They can pay 12% or they can pay 5%. 12% with ITC, 5% without ITC. So therefore, based on rate, now you cannot categorize. Means clearly it should be given in the question. If it is not given in the question, you can take any assumption here. So either FCM assumption or RCM assumption you can take, but 99% it will be given in the question itself. Don't worry. If it is not given in the question, then you take any assumption and you write. Okay. So, but the answer will be correct answer only. So, but 99% it will be given in the question. So, what are the two options available to GTA? Come on. FCM option, RCM option. And they need to choose that for every financial year. And FCM, what is the rate that they have? 12%. RCM, and again in FCM they have one more rate also. So GTA, Goods Transport Agency, they have, so two option. Option 1, FCM. Option 1, so one second, wait. You are writing this, so somewhere in this page number 45, you have some space there, you write down. So GTA, option 1 and option 2. So option 1 is FCM, option 2 is RCM, and RCM always at what rate? 5%. FCM again, two rates they have, at 12% or at 5%. 12% will be with ITC, with ITC. 5% will be without ITC. 5% will be without ITC. And they need to decide when? Decided. So, prior, decided 15 days prior, 15 days prior to commencement of financial year, prior to beginning of financial year, decided 15 days prior to beginning of financial year. Option 1 versus option 2. Now, whether they go for 12% or 5%, recipient can take ITC. So this with ITC, without ITC is for whom? Supplier. So if GTA opts for 12% with ITC, they can take ITC and they will charge us 12%. So we can take 12% ITC. Suppose if GTA opts to pay at 5%, means GTA cannot take ITC. Now they charge that 5% to us. Can we take ITC? Yes. Recipient can always take ITC with respect to that. So whenever we are receiving GTA service, let the GTA pay 12% or 5%, we will always take credit. The problem is for GTA only. So if they pay 12%, they can take ITC. If they pay 5%, they cannot take ITC. You understood or not? So that is this, option 1 and option 2. And next we have Sir CG. G we have completed, CG we have completed. So up to that, can you tell me? Yes for security lending services, supplier, lender, recipient, borrower, liability to pay GSTs on recipient, borrower. I, import of services, and supplier outside India, recipient in India. Any exception to RCM? Yes. OIDR services by non-taxable online recipient. Then R, renting of motor vehicles, supplier, owner, recipient who takes it on rent. Any conditions for RCM? Yes. 3 conditions. What are they? Supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. Okay. Then next R, renting of residential property by owner of the property, supplier, recipient, tenant. Who is liable to pay GST? Tenant. And for that one condition is there, the tenant should be registered person. Okay. Then C for copyright. What are the 4 copyrights? Original, literary, dramatic, artistic, musical. Then who will pay GST? Recipient. Any exception? author. In case of original literary, they can opt to pay GST under FCM. And that is lock-in for a period of 1 year from the date of exercising the option. Then next one, so G, GTA services, supplier GTA, recipient, consignor or consignee who will pay freight. And whether it is RCM, yes. But we have option 1, option 2. Option 1, FCM. Option 2, RCM. GTA should decide it when? 15 days prior to commencement of the financial year. And if it is FCM rate, 12% with ITC, 5% without ITC. RCM, 5%. All these can be taken as ITC by the recipient? Yes. Now look into the next one, government services. So government, in our last class we discussed, so government services, only 4 activities of government is covered under supply. What are the 4 activities of government? Department of Post, airport or port services, transportation of goods or passengers, and services to business entities. Now the 4th point we are discussing, that is only covered under RCM. First 3 not covered under RCM, only 4th activity. What is that 4th activity? Services provided by government to business entity is covered under RCM. So who is the supplier here? Government. When I say government, I mean to say central government, state government, local authority or union territory. That is government. Who is the recipient? Business entity. Business entity is the recipient. And generally it will be covered under RCM. Business entity will pay GST under RCM. But one exception is there, pa. That is renting of immovable property by government to business entity. If that business entity is unregistered, government only will pay GST under FCM. Again I am repeating, government service to business entities always RCM, pa. But only one case, FCM it will come. What is that one case? Renting of immobile property to unregistered person. But sir, you said renting of immobile property to unregistered person is exempted. As a residential property, pa, I am talking about services to business entity. Why for business entity they will give residential property? Definitely it will be a commercial property. Did I say commercial property exempted like that? Commercial property always, renting of commercial property always. So therefore, here recipient is unregistered. So government only will pay GST under FCM. So therefore, what you need to remember in case of government services, come on, supplier is government, recipient is business entity, always covered under RCM. But exception, one exception, what is that? Renting of immobile property to unregistered person. Okay. Then next, O for overseeing committee services to RBI in relation to restructuring NPAs. NPAs means non-performing assets. You just write down there, non-performing assets, non-performing assets. What is non-performing asset? When a person takes loan and not repay the loan and run away to some other country, so then that person is called as a non-performing asset. That loan is called as a non-performing asset. It is receivable only, but that person is not paying. That's why it is non-performing asset. It's asset only, but the asset is not performing. You understood? And in that case, so what will happen? RBI will appoint one overseeing committee. For example, Vijay Mallya is there. Vijay Mallya has taken lot of loans and he did not repay the loan to SBI. Now what will happen? RBI's head will roll. Why? Because if SBI bank, tomorrow what SBI bank will say, okay sir, so he has taken loan, therefore I don't have money, I cannot pay to the depositors. Then who will be affected? Public at large will be affected. Now public under what trust has deposited money in bank? RBI. Correct or not? So therefore tomorrow RBI has to make the payment. So that's the reason why RBI appointed one overseeing committee. This overseeing committee, there will be n number of overseeing committee. For one NPA, one overseeing committee they will appoint. So this overseeing committee will restructure the NPAs. What they will do? So they will follow up with Vijay Mallya, whichever country he is in. They will speak to that country. They will ensure that he is arrested there and he will be brought to India and somehow the road will be recovered. So he will have money. Every person who borrows money, so what they will do is that they will definitely keep that money somewhere. So how they can spend pa? So definitely not possible. You would have seen Tunivu movie na? Enna pa? You did not see. A movie is good pa. I'm not talking about hero pa. Where I said about hero, I said about movie. The concept is good. Actually, that is the real concept. These business people, they borrow the loan and they will be purchasing or they will be transferring that money to some other persons and it will be there somewhere. So therefore, somehow this restructuring will be done to recover that money from these people. So for this purpose, that overseeing committee will get some commission from RBI. On that commission, overseeing committee is not required to pay GST because overseeing committee has to register and then pay GST. That is a headache for them. That's the reason why. Who is paying commission to them? RBI. So RBI will pay GST under RCM. Is it clear or not? So in case of overseeing committee, who is the supplier? Overseeing committee. Who is the recipient? RBI. And on the commission, who will pay GST? RBI. Any exceptions, etc.? No, that much only. Then T. T for TDR, FSI, long-term lease. So yesterday I discussed that TDR, FSI and long-term lease. Again I am explaining, carefully listen. FSI refers to floor space index. Now I am a landowner. I have some land and on that I constructed only ground floor and 2 more floors can be constructed, but I have not constructed. I don't have money to construct. I don't want that because for my family 1 floor only enough. So now you are a builder. You are approaching me. Sir, 2 more floors can be constructed. Why are you not constructing? So can I construct it for you? So then I will ask, I cannot pay 1 rupee also to you. No worry sir, you don't have to pay me money. You just allow me to construct 2 floors on the top of that and I will give you some money for that. So what is happening here? I am not paying money and I am getting money. So, but those 2 floors are mine, no, the 2 floors will belong to the builder. Then what builder will do with that? The builder will sell those 1 floor, 2 floors to some other person and get the money. So he incurred the cost on construction. Now I will ask, okay, give me 1 crore. He will give me 1 crore. I did not sell my land. I did not sell my building. I am staying in the same house. But unutilized FSI I transferred for which I got 1 crore rupees. You understood or not? So therefore, for this 1 crore, so what builder, how builder will recover that 1 crore? He will invest some 50 lakhs extra in construction and he will make some 2 floors. 2 floors means say 2 properties. Each property he will sell for 1.5 crore and he will get 3 crores. You understood or not? So in this case, I am transferring what? Land. I am transferring building. Then what I am transferring? The unutilized space or unutilized FSI I am transferring, for which he gave me 1 crore. On that 1 crore, who will pay GST? The builder will pay GST. Pa, you don't know the power of land, pa. That is the power of land. That too when you are in cities and all, so you have lot of FSI given by the government and you don't need that much. So that's where if you see Anna Nagar, T Nagar, Mailapur, Adayar, these places and all, what they will do, they will go on a joint development model with the builder. So they will give their house and the builder will construct superbly 1 apartment. So they will be getting their house, 1 floor whatever they are having, plus 1 more extra flat also they will get, some money also they will get. So if you have land, that will take care of you. So people used to say that you should invest in land and gold. That is true. So today people who are having land, even if they are not educated also, they are minting money like anything. This is one such case. I did not invest 1 rupee also, but I got 1 crore. What I sacrificed? My unutilized FSI I sacrificed, for which I got 1 crore. On that 1 crore, I will not pay GST. The recipient will pay. That too, builder will pay GST under RCM. Then TDR. TDR is like a virtual land. So why this virtual land will be given by government? Government has to, suppose if the government demolishes, so recently even I also got a TDR, practically I am telling you, I also got a TDR. So in somewhere in my town, so in Andhra Pradesh somewhere, so even I too don't know that. And the place I know, but my grandfather used to have one place. and road widening has happened in my place. And in that road widening, they have demolished my grandfather's property. When they demolished my grandfather's property, so they have not given the compensation. They have given two options to people. So either you need compensation, we will give you per square feet 5,000 rupees. So some 1,000 square feet got demolished. 5,000 rupees per square feet, or we will give you TDR, like that. And so no one was there belonging to that property. So therefore government gave TDR. Why government will give TDR? What is the advantage to government? Compensation means cash outflow. Compensation means cash outflow. TDR means no cash outflow, just on paper they will give. And that paper was submitted in the registrar office, and I got a letter asking me to go and collect the TDR. And I went and collected the TDR. When I collected the TDR, so that TDR is having 1,000 square feet, which can be used for construction of any building above the FSI to the extent of 1,000 square feet. Now, in town and all, no one will do the construction. If it is in city, that would have got super demand. But maybe after 10 years, what will happen? So the town will become a city one day. So at that time, some builder will be constructing some big commercial complex there. At that time, he will cross the FSI, because in Chennai, you can construct only 4 or 5 floors. But if you see 10 floors, 20 floors are also constructing, correct or not? Go and see by many main roads and all. So 10 floors buildings are also there. How they are able to construct 10 floors? Because they would have procured the TDR. So now someone after 10 years will come and ask me to sell the TDR to them. I will sell. At the time I will quote 20,000 rupees per square feet. Today if I have collected, I would have collected only 5,000 rupees. And after 10 years, definitely 20 or 25,000 rupees also I can sell. Are you understanding this? So that is about TDR, a virtual land. Now say I am selling the TDR to some person. I get the money. Definitely that money what I receive is more than what government is going to pay as compensation. So therefore it is win-win situation for everyone. So therefore now I get some money from the builder now by transferring this virtual land TDR. On that I will pay GST or the builder will pay GST. Builder will pay GST under RCM. Understood about TDR? Then long-term lease of land. Long-term lease of land means, say, so a big land is there, some 4,000 square feet, 5,000 square feet land is there. I don't want to sell the land. And this land is somewhere in the outskirts. No agriculture. It is agriculture also not possible. I don't want to sell that land also. Now, I will be giving this land on a lease model to one industry to set up their factory there. Are you understanding? To one industry or to one warehouse to open a warehouse over there. And what is called as a long-term lease? Lease for a period 30 years or more is only called as long-term lease. What is long-term lease, pa? Lease for a period 30 years or more. Now I gave the lease, now land on lease. Now I get what? Lease rentals. On that lease rentals, I will not pay GST. The one who is taking, that is the builder, etc., who is taking that on rent, lease, he will pay GST under RCM. So what are the three things? TDR, FSI, long-term lease. TDR full form, transferable development right. FSI full form, floor space index. Long-term lease means, no, 30 years or more, greater than or equals to 30 years. Now in these three cases, who is the supplier? Landowner. Landowner. Who is the recipient? Promoter or builder. So who will pay GST? Promoter or builder. That's it, pa. Next. So sir, CG got. We completed. Now salads. In that, yes sir. Sponsorship services. In sponsorship service, who is the supplier and who is the recipient? Organizer of the event or organizer of the place is called as the sponsor, like a supplier, and the one who give the money, sponsorer, is the recipient. You understood? Say one cricket event is going to happen, IPL match is going to commence now. So for that, definitely, Vivo or Oppo or some brand name will be giving money. Who Tata va? This time Tata. Okay, Tata. So now, who is the supplier? Who is the recipient here? IPL board is the supplier, organizer of event. And who is the recipient? Sponsor. Tata is the recipient. Now, who is having liability to pay GST? on the recipient if condition is there. If the recipient is body, corporate or firm. If the recipient is body, corporate or firm, liability to pay GST is on recipient. What if the recipient is not body, corporate or firm, some other person? Then FCM. Okay. But generally 90% of the cases the recipient will be body, corporate or firm only. Rarely the recipient could be other than body, corporate or firm, then it will be FCM. Okay. So sponsorship service, who is the supplier? Organizer of event. Who is the recipient? Sponsorer. Who is having liability to pay GST? Sponsorer. Condition for RCM? Recipient should be body, corporate or firm. Okay. Then next one, A. A for agent service. Total 5 agents are covered there. Insurance agent to insurance company. So insurance agent is providing service to insurance company. Supplier is insurance agent, recipient is insurance company, and supplier will get the insurance commission. So on that commission, liability to pay GST is on insurance company under RCM. That is first one. Second, recovery agent to bank, financial institution or NBFC. Recovery agent, what work recovery agent will be doing? He will recover the loans. For recovering the loans, so bank will be paying him commission. On that commission, who will pay GST? Bank will pay GST under RCM. Then direct selling agent. Who is direct selling agent? Those who do marketing for the banking products. So we get called, na, you need credit card, you need loan, etc. and all. So in a day, at least 4 or 5 spam calls I will be getting. So every time I will block. And when I block, again next day again some other number it will come. And it is like that to this Bajaj Finance. Torturous it is. So what they do is that they call, I'll say I don't need loan and I will not get loan also. Whatever I am asking I will not get. If possible give some 2-3 crores like that I will ask. But they will not be giving. Okay. So they will give 5 lakhs loan, 10 lakhs loan. What to do with that? That 2-3 crores na, some commercial complex I will buy and I will construct 4-5 shops, give it on rent, happily I will retire. You understood or not? But they will not give that. But they will be giving 5 lakhs, 10 lakhs. Credit card you need. Credit card is one stupid thing. So already I have credit card. No sir, again take, you get this offer, that offer, like that they will be telling. These people are called as direct selling agents. So why they follow that much? Because for selling the bank product, they get a commission. On that commission, who will pay GST? Bank will pay GST. But for that, what is the condition for RCM? Please see. Supplier should be other than body, corporate or firm. Recipient illa. Supplier. Supplier, their direct selling agent should be other than body, corporate or firm. What if direct selling agent is body, corporate or firm? It will be covered under FCM only. So supplier should be other than body, corporate or firm. See this. Other than, supplier should be other than body, corporate or firm. Then only it will be covered under RCM. Then number 4, business facilitator to banking company. Who is this business facilitator? Basically they are money remittance agents. Money remittance agents. For example, in a place where there is no ATM center, so some people will be appointed as business facilitator. What they will do? They will pay the money to us and they will collect our account number and OTP, and in our bank account money gets debited. For doing this money remittance, they will get some 10 rupees or 20 rupees per transaction as commission. What is the advantage of this to the bank? Bank don't have to set up a ATM center. ATM center means one place they need to take on rent, AC they need to fix. If they fix AC, then lot of people, donkeys, monkeys will come and sleep there. So therefore one security they need to keep. You understood or not? These are all cost. So that's the reason why they will be appointing these business facilitators. So business facilitators will do money remittance activities for which they get a commission from the bank, and on that commission who will pay GST again? Bank will pay GST under RCM. Then 5th one, agent of business correspondent to business correspondent. Business correspondents are again agents of bank. So what they do is that account opening, loan processing, these kind of activities which the bank manager has to do. So those job will be done by business correspondents. These business correspondents are not covered under RCM. Business correspondent service is not covered under RCM. Read there carefully. Agent of business correspondent. There is an agent of business correspondent who is providing services to business correspondent. On that commission, liability to pay GST is on business correspondent. Understood or not? So, what are the 5 agents? Can you tell me? First, insurance agent to insurance company. Any conditions? No. Then second, recovery agent to bank, financial institution, NBFC. Any conditions? No. Third, direct selling agent to bank, financial institution. Any condition for RCM? Yes. Supplier should be other than body, corporate or firm. Very good. Then next, business facilitator to banking company. Any conditions? No. Then next, agent of business correspondent to business correspondent. Good pa. So these 5 cases, liability to pay GST is on recipient, agent services. Then L refers to legal service by individual advocate or firm of advocate. So this individual advocate or firm of advocate provides services to whom? Business entities. So who will pay GST? Advocate will pay or business entity will pay? Business entity will pay. That's it. Okay. Then next one, arbitrator. What is the difference between advocate and arbitrator? Advocate will settle the case through the court of law. Arbitrator will settle the case out of the court. Okay. So this arbitrator services, again to whom they will provide service? To business entity. It is covered under RCM. So what is L? Legal service. Who is the supplier? Individual advocate or firm of advocate. Who is the recipient? Business entity. So who will pay GST? Business entity will pay. And in case of A for arbitrator service. Who is the supplier? Arbitrator. Recipient? Business entity. Who will pay GST? Business entity will pay. Who is a business entity? Any person engaged in business is known as business entity. Is it clear? Just write down there. Don't get confused between body, corporate and business entity. Business entity means any person engaged in business. Any person engaged in business is known as business entity. Any person. Any person means even individual also will come under business entity. Yes. Individual, firm, LLP, every person will come under business entity. So whether I am business entity? Yes. So therefore I do business. I do business. So when I do business, definitely I will be coming under business entity. Suppose if I am receiving services for my personal purpose, say suppose if my divorce case, example lampa, yeah. So for example, okay, if my divorce case, I appoint one advocate, a service provided to business entity other than business entity, other than business entity, okay. So just for example only, you don't create any story there, okay. So just for example, or I stabbed one person, okay. So one criminal case. So now in that case, so suppose if one advocate is arguing, then it will be coming under service provided to business entity or other than business entity. So other than, same person, for business purpose it will become business entity, for personal purpose it will become other than business entity. So but what is covered under RCM here? Business entity. Then, so L, A we have completed, then 2 more, D and S. D for director services. Director is providing services to whom? Company or body, corporate. For that purpose, director will be receiving some money. So sitting fees, etc. on that. On that, liability to pay GST is on company. But in this, you need to remember one important point. Director should not be an employee of the company. If director is employee of the company, then it is dash. Covered under supplier, excluded from supplier. Excluded from supplier. Which point? Employee to employer in the course of employment. Very good. So therefore, director should not be an employee of the company. And how do you know whether a director is an employee or not an employee of the company? For that purpose, one circular has been given as to, based on Companies Act or based on Income Tax Act, you will be able to identify. So suppose you check the contract with which the company has entered into with director. So director and company will have a contract. That contract you see, is it contract of service or contract for service? If it is contract of service, then there exists a employer-employee relationship or a master-servant relationship. You understood or not? So generally we will be able to identify from the contract itself. So contract of service or contract for service. Contract of service means employer-employee relationship. Contract for service means principal to principal. Okay, so wherein we are concerned only about work, not about the time. So I have to do this work. Either I can do at my place or I can do at your place, but I have to complete this work. Example, audit. Audit is a contract for service because I have to do the audit. I need to submit you the audit report. But audit I can do at my place or your place, partly my place, partly your place. Correct or not? So therefore, that is contract for service. But if you are working for an organization on a full-time employment basis, it is contract of service. Whether you do work or not, morning you need to go, evening till evening you should be there. And so some work will be there, some work will not be there, but here it is not about the work, it is about the timing and the dedication. You understood or not? So that is contract of service. Generally we will be able to find there. If that is not possible, then you check the TDS. So money is remitted by the company to the director. Now on that money remitted by company to director, whether company has computed TDS under 192 or 194J. If the company has computed TDS under 192, then the money received by the director will come under which head? Income from salaries, therefore employer-employee relationship, therefore it is excluded from supply. Suppose if the company is remitting the money to the director and on that the company is deducting TDS under 194J, then the money so received by the director from the company will be covered under which head? PGBP or IFOS. So therefore it will be covered under supply and chargeable to GST. But who will pay GST in that case? The company or body corporate will pay GST under RCM. Is it clear, pa? So first you are checking contract of service or contract for service. Contract of service means excluded from supply. Contract for service means covered under supply and chargeable to GST in the hands of company. Or income tax act, TDS under 192, then it is income from salaries, so excluded from supply. TDS under 194J, then it will be income under PGVP IFOS covered under supply, chargeable to GST under RCM. And so that is with respect to this director services. Related to this director services, one illustration I have given. See the next page, page number 45. Arpan Singhania is a director in Narayan Limited. The company paid him the sitting fee amounting to 25,000 for the month of January. Further salary was paid to Arpan Singhania amounting to 1.5 lakhs for the month of January, on which TDS was also deducted as per the applicable provisions under Income Tax Act. So first 25,000 is what? Sitting fees. Is this sitting fees covered under salary? No. That sitting fees is not covered under salary. It is normal. Contract for service. So therefore that will be covered under supply? Yes. So on that sitting fee 25,000, who will pay GST? Arpan Singhania or Narayan Limited? Narayan Limited will pay GST under RCM. Then this Arpan Singhania has received 1.5 lakhs as salary. And on that salary TDS was also deducted, which means it will be coming under 192 TDS. Salary TDS deducted means what? 192. So therefore it will be covered under supply or excluded from supply? Excluded from supply, under employee to employer in the course of employment. Then Tapasya and Associates, in which Arpan Singhania is a partner, supplied certain professional services to Narayan Limited in the month of January for an amount of 2 lakhs. What about this 2 lakhs? Is it services? First of all, services provided by director to company? No. Because here who is providing the services? Tapasya and Associates. In that Tapasya and Associates, this Arpan Singhania is a partner. So whether the firm is providing or the director is providing service, firm is providing service means it is not director services to company, so it is not covered under RCM. Only director services to company is covered under RCM. So this is not covered under RCM, then this will be FCM. So liability to pay GST is on Tapasya and Associates only under FCM. Is it clear? So that is the answer for these three situations. Then last one, security agency services. See the previous page. In that, sir, CG got salads. So yes, last yes, security agency services. So what security agency will do? They will supply security personnel for banks or hospitals, education institutions, shopping malls, etc. So they will be supplying the security personnel. So these security personnel or security agency will come under RCM if conditions are there. Supplier should be other than body corporate, means that security agency should be other than body corporate, and the recipient should be registered. Recipient should be registered, and recipient is not opting for composition scheme or not registered only to deduct TDS under GST, means other than these two. So recipient should be registered, but they should not be opting for composition scheme. What if recipient is registered and opting for composition scheme? It will not come under RCM. Okay. Recipient is registered only to deduct TDS under GST. Even then, it will not be covered under RCM. So when it will come under RCM, the recipient should be registered and not opting for composition scheme or not registered only to deduct TDS, then it will come under RCM. So see this list. Supplier is body corporate. No need to check anything. Always FCM. Why? First condition is what? Supplier should be other than body corporate. Now second, supplier is other than body corporate, but recipient is unregistered. Then also FCM. Why? Supplier is other than body corporate. Correct. First condition satisfied. But the second condition, recipient should be registered. But here recipient is unregistered. So therefore RCM not applicable. Okay. Third one, supplier other than body corporate, recipient is registered but opting for composition scheme. Again FCM. Supplier is other than body corporate, recipient is registered and registered only to deduct TDS. Then also FCM. Then last case, supplier other than body corporate, recipient is registered other than above, then only it will be covered under RCM. So in case of security agency service, who is the supplier? Security agency. Who is the recipient? The one who received the security agency service, security personnel. Then here, what are the conditions for RCM? Supplier should be other than body corporate. Recipient should be registered, not body corporate, registered. And they should not be registered for composition scheme or not registered only to deduct TDS. Now, just tell me, what is the list of services which are covered under RCM? Sir, CG got salads. Yes for security lending. I for import of service. R for renting of motor vehicles. Another R, renting of residential property. C, copyright services. G, GTA services. Another G, government services to business entities. O, overseeing committee to RBI. T, TDR, FSI, long-term lease. Then yes, salads. Yes, sponsorship services. A, agent services. L, legal services by advocate or firm of advocates. Then another A, arbitrator services. D, director services to company or body corporate. Last, yes, security agency services. Okay. Now, in this, which places we have conditions? For yes, no condition. I, no condition. R, three conditions are there for renting of motor vehicles. What are the three conditions? Supplier should be other than body corporate, recipient should be body corporate, rate of GST 5%. Another R also there is a condition. Renting of residential property, recipient should be registered. Then C, no conditions. And then G, GTA service, no conditions. Then government service, no conditions. Exceptions are there, but conditions not there. Okay. So then O, no conditions. T also no conditions. Yes. Sponsorship service, we have condition. What is that? Recipient should be body corporate or firm. Again in agents, direct selling agent only we have condition. What is that? Supplier should be other than body corporate or firm. And thereafter, we don't have condition anywhere. Last, yes alone we have condition. What is that? Supplier should be other than body corporate. Recipient should be registered, not opting for composition scheme, not registered to deduct TDS. Then, exception. So, there are three places where supplier will pay GST, recipient will not pay GST even though covered here. What are they? Import of service. Which service? Import of OIDR service by non-taxable online recipient. Then another place, author. Author can opt to pay GST under FCM for a period of 1 year. Then again, GTA. GTA also can opt to pay GST under FCM. So for financial year. One more point, government. Government providing services, renting of immobile property to unregistered person, it will be covered under FCM. Correct? So this is about 9 subsection 3. 9.4 and 9.5 we have completed. So we have completed this segment number 3, liability to pay GST. Now look into the practice manual related to this segment 3, liability to pay GST. MCQs, first MCQ. So take page number 39. I have split these books into two because this last minute exam purpose and all, you don't need to read practice manual. You have to read only the provision. So that's the reason why I just split it. Practice manual, so only for reference, 1 time or 2 times practice purpose only. And till the time you go into the exam hall, not inside exam hall, till the time you go into exam hall, so you need to refer to that revised book, okay, theory book. Then look into this MCQ first one. GST is not payable by recipient of service in the following cases. Services provided by way of sponsorship to ABC Limited. So who is payable? Sponsorship to ABC Limited. Is sponsorship covered under RCM? Yes. Condition? Recipient should be body corporate or firm. Recipient body corporator. So therefore it will come under RCM. Then service supplied by Director of Galaxy Limited to Mr. Krishna. Is it covered under RCM? No. Director to company is only RCM. But is it director to company? So no. Director of a company to another person, not to the company. You understood? Director of a company to Mr. Krishna. It is not covered under RCM. If director is providing service to company, then only it is covered under RCM. So therefore here it is no RCM, it is FCM. Services by Department of Post by way of Speed Post to MNO Limited. Whether Department of Post is covered under RCM? No, which is covered under RCM? Government services to business entities other than Department of Post, Transportation, Airport or Port. So therefore it is covered under FCM. Services supplied by recovery agent to SNSP Bank. Is recovery agent to bank covered under RCM? In that 5 agents, recovery agent is covered. So RCM. So the answer is 2 and 3. Option C. Then next second. XX registered in Delhi purchased books from PC traders registered in Uttar Pradesh. Books are exempt from GST. XX arranged the transportation of these books from a goods transport agency which charged a freight of 9,000 for the same. GST payable at 5% on such GTS services. Which of the following statement is correct in the given context? GST of 450 is payable by XX on reverse charge basis, and GST, last option you see, GST of 450 is payable by GTA. Actually now both the options are correct. Correct? Because 5% means not necessary RCM. 5% means not necessary RCM. It can be FCM also. Am I right? So, therefore, in this case, so option A is also correct, option D is also correct. They have two options and they need to choose one option in the beginning of the financial year, correct or not? So, any one option they need to choose, whether that is given anywhere that they opted for FCM like that, no. So, therefore, here both option A as well as option D, both are correct. Not only A, as per old portion, that is before this amendment, option A is correct. Okay, because 5% means always RCM. But now, because of the amendment, even option D is also correct. So, you just write down there, note, GTA can pay GST, GTA can pay GST under FCM at 5%. Okay. But sir, in exam, I cannot select both options, sir. Suppose if they give like this question, I cannot mark both A and D because OMR will not accept that way, any one option. So generally RCM. Exception only FCM. Okay, Papa. Generally author also RCM. GTA also RCM because it is covered under the list of service under RCM. They have option to pay GST under FCM. So therefore, which one you need to select? Suppose if this question you get in exam, which one you need to select? Option A. Why option A you need to select in exam? Because in the absence of information, we will take the assumption, usual assumption as RCM. Only when they select FCM option, it will be FCM. Are you understanding? Suppose if they give 12%, by default FCM, because we will not have confusion between FCM and RCM there. 12% means by default FCM, their answer will be D. Okay. So therefore, in exam, what we need to select as answer for this question, option A. Even though option D is correct, but so we take the assumption that it will be covered under RCM. So GTA can pay GST under FCM at 5%. Full stop. However, it is assumed that they have not opted for FCM. They have not opted for FCM. Is it clear here? Then, which of the following service does not fall under reverse charge provisions as contained in section 9(3) of CGST Act? Services supplied by arbitral tribunal to business entity. Whether it is covered under RCM? Yes, arbitrator services to business entity. Sponsorship service provided to partnership firm. Is sponsorship service RCM? Condition? Recipient should be body, corporate or firm. Recipient is firm. So therefore it is covered under RCM. Sponsorship service to body corporate. Is it also RCM? Yes. Service of renting a motor vehicle for passengers provided to a recipient other than body corporate. In case of renting a motor vehicle, what is the condition? Supplier should be other than body corporate. Recipient should be body corporate, but the recipient is other than body corporate. Therefore, it will be FCM. So, option D is the answer. Then, in case of GTA service, tax is to be paid under forward charge if GST is payable at 12%, GST is payable at 5%, and a factory registered under Factories Act is the recipient of GTA service. An unregistered individual end customer is the recipient of GTA. A registered casual taxable person is the recipient of GTA. Now, all these are confusing. Simple. When it is 12%, always they are asking, they have to pay under FCM if GST is at 12%. Even if they can pay at 5% also under FCM, correct or not? But for that, what should be given as condition? Without ITC. Anywhere in the option it is there? No. That's why we are not selecting any other option. Only option A is the answer. Then, descriptive questions. Question number 1. State the person liable to pay GST in the following independent cases, provided recipient is located in the taxable territory. So recipient is in taxable territory, India only. Services provided by arbitral tribunal to any business entity. Anywhere covered under RCM? Yes, A. Arbitrator services to business entity. Covered under RCM. So we need to write that it is covered under RCM. Then, sponsorship service provided by company to an individual. Company to individual. So who should be the recipient for sponsorship service? Body, corporate or firm. But here it is individual. That's why it will not come under RCM. It will be FCM. But justification you need to write in exam. What justification? As per section 9 subsection 3 read with notification number 13 of 2017. So in case of sponsorship service to body, corporate or firm is only covered under RCM. In the present case, as the recipient is other than body, corporate or firm, it is not covered under RCM. Like that we should write. Renting of immobile property service provided by government to registered business entity. Government to business entity. Is it covered under RCM? Yes, but one case it is not covered under RCM. Which case? Renting of immobile property to unregistered. Here unregistered, no, registered. So therefore it will come under RCM. First one is RCM, last one is RCM, and the second one is FCM. Then next question number 2. Legal fees is received by Shushrut, an advocate, from Messrs. Tattva Trading Company having turnover of 50 lakhs in preceding financial year. Who is the person liable to pay tax in this case? Advocate providing services. So, an advocate, legal service is received by Shushrut, an advocate, so from Messrs. Tattva Trading Company. So here, who is the supplier, who is the recipient? So actually it should be received now, provided na. Legal fees is received, correct. It is not legal services received, legal fee received. When they receive the legal fee, means why are they receiving legal fee? Because they are providing the services, legal services. So, legal service provided by individual advocate to a business entity. Is it covered under RCM? Yes. So, liability to pay GST is on this Tattva Trading Company under RCM. Then number 3. State the person liable to pay GST in the following independent cases, provided recipient is located in taxable territory. Service is supplied by insurance agent to insurance company. Insurance agent to insurance company, is it covered under RCM? Yes, it is covered under RCM. Supplies, services supplied by recovery agent to a car dealer. Recovery agent is he in RCM? Yes, no, agent. But when recovery agent will come in RCM? Only when they provide service to bank, financial institution or NBFC, not to a car dealer. So it will be FCM. Security service, security agency service, service provided by way of supply of security personnel provided to a registered person. Is it covered under RCM? Security agency service, what are the conditions? Supplier should be other than body corporate, recipient should be registered. So therefore it will come under RCM. Here also same, first and last RCM, second one is FCM. Then question number 4. Decide which person is liable to pay GST in the following independent cases, where the recipient is located in taxable territory. Ignore the aggregate turnover and exemption. Mr. Raghu provided sponsorship service to We-Win Cricket Academy LLP. Recipient is who? Two. We-Win Cricket Academy LLP. Is recipient body corporate or firm? Yes. So therefore it will come under RCM. Safe Trans, a GTA, transported goods of Kapil and Company, a partnership firm, which is not registered under GST. So now, we have both the options now. But first option is nothing selected. GTA, not selected anything. So which option? RCM. If GTA opts to pay GST under FCM, then FCM option. But otherwise it will be RCM. I told you, whenever the question is silent, you need to take it as RCM. Only when the question they are telling that they are opting for FCM, we need to take it as FCM. So, therefore, here it is considered as RCM, reverse charge, and they are compulsorily required to get registered. Note, you just write down there, note, GTA can also opt to pay GST under FCM for a financial year. Clear? Then, next question. Vicky Franklin, an unregistered famous author, received 3 crores of consideration from Shiv Bhagwan Publications located in Indore for supply of service by way of temporary transfer of a copyright covered under 13(1)(a) relating to original literary of his book. So, original literary, temporary transfer of copyright related to original literary, is it covered under RCM? Yes. He finished his work and made available the book to the publisher, but has not yet raised the invoice. Vicky Franklin is of the view that SBP is liable to pay tax under reverse charge. Is it correct? Yes, RCM only. So, Shiv Bhagwan Publication only liable to pay GST. SBP does not concur with his view and is not ready to deposit the tax under any circumstances. Examine the view of Mr. Vicky Franklin is correct. So, first you need to write, in case of services by way of temporary transfer of copyright relating to original literary, liability to pay GST is on recipient, that is on Shiv Bhagwan Publications. Okay. Now, further, if the view that Vicky Franklin is correct, what is the recourse available with Vicky Franklin to comply with the requirements of GST law, as SBP has completely refused to deposit the tax? So, Vicky Franklin may opt to pay GST under FCM. However, he being unregistered, first he need to register and thereafter he need to opt to pay GST under FCM. But for the next 1 year from the date of exercising the option, Vicky Franklin only will pay GST under FCM and the said GST can be recovered from the recipient. Or alternatively, Vicky Franklin no need to register and pay GST because the primary liability is on whom? Recipient, Shiv Bhagwan Publications only. That is what we need to write. Then next, question number 6. In the following independent cases, see, this is the usual question that you will get. 2 situations they will give for 4 marks. So, from supply, you will get 2 situations, 4 marks. Then again, liability to pay GST, 2 situations, 4 marks, like 2 marks each, like that. Okay. In the following independent cases, decide who is liable to pay GST, if any. You may assume that recipient is located in the taxable territory. Ignore the aggregate turnover and exemption available. Veer Transport, a registered GTA, paying IGST at 12%, transported goods by road of Dilip and Company, a sole proprietary firm, other than specified person, which is not registered under GST or any other law. Now, GTA 12%, by default FCM, okay. Then, suppose if it is given as 5%, first you will write it as RCM, and GTA can opt to pay GST under FCM also, like that we will write. Then, Mr. Kamal Jain, an unregistered famous author, received 20 lakhs of consideration from PQR Publications Limited for supply of service by way of temporary transfer of a copyright covered under section 13(1)(a) of Copyright Act relating to original literary. Who will pay? RCM, because supplier is unregistered. So, author is unregistered. So, by default, who will pay? Publisher only will pay. Because if author want to opt to pay GST under FCM, first they should be registered. Then next. So actually this service is exempted. So transportation of goods of a sole proprietary firm other than specified person is exempted. But in the question it is given that ignore aggregate turnover and exemption. That's why we are writing as FCM. Is it clear? Actually this service is exempted. Why it is exempted? Because in exemptions we have services provided to GTS service provided to individual HUF or AJP who is not registered and not having a factory is exempted. We have an exemption. But why are we not applying that exemption here? Because clearly in the question they gave ignore aggregate turnover and exemption available. That's why we are ignoring exemptions and just answering FCM or RCM. Okay. Then question number 7, Mr. Priyam, a director of Sun Moon Company Private Limited, provided service to the company for remuneration of 1,25,000. Briefly answer whether GST is applicable in the below mentioned independent cases. If yes, who is liable to pay GST? If Priyam is an independent director of Sun Moon Company and not an employee of the company, whether it is covered under supply? Yes. And who will pay GST? RCM. Sun Moon Company Private Limited will pay GST. Mr. Priyam is an executive director, that is an employee of Sun Moon Company Private Limited. Out of total remuneration of 1,25,000, 60,000 is declared as salaries in the books and on which TDS is subject to 192. However, 65,000 is declared separately other than salaries. So therefore, on that 65,000 TDS is under 194J. Now tell me what is the answer for this. For 60,000 it is not a supply and GST not applicable, whereas for remaining 65,000 it is supply under GST and GST is payable by Sun Moon Company Private Limited under RCM. So this is actually given in RTP, not yet tested in exams. Okay, very good question it is. Then because it is linked with that circular, you need to write about 194J, 192 and then elaborate it. Question number 8. Income is received by Maharashtra government from renting of immobile property to Ganapati Maurya Private Limited, registered in Maharashtra. Turnover of the company was 18 lakhs in the preceding financial year and applicable threshold limit to them is 20 lakhs. Is GST payable in the present case? If yes, who is liable to pay the GST on the same? See, government providing renting of immobile property to a business entity. So it will be taxable. We don't have any exemption with respect to that. And so we have exemption if the value of supply does not exceed 5,000, but that point is not applicable here. So this service is taxable. But who will pay GST in this case? So is the recipient Ganapati Maurya Private Limited registered or not? Registered. So liability to pay GST is on Ganapati Maurya Private Limited. What if Ganapati Maurya Private Limited is not registered? Then it will be supplier. Maharashtra government is required to pay GST under FCM. Okay. So that is, these are the questions that we have on liability to pay GST. Now we are moving on to exemptions here because this RCM is connected to exemptions. Because in exam what they do, they combine these exemptions and RCM together and they will be asking questions. So I am skipping this value of supply and I am moving on to even input tax credit also I am skipping, moving on to exemptions under GST, segment 7, page number 104. This exemptions chapter, you need to focus more because there are lots of amendments in exemptions. So you might have studied the old provisions. And there are some provisions which are not at all applicable also because it is omitted. So please be attentive in the class, listen fully, focus on to this. So whatever we are learning are exemptions. So remaining cases will be taxable. Okay. First, agriculture related services. In agriculture related services, we are not talking about agriculture. We are talking about service in relation to agriculture or agricultural produce. Means one person is doing agriculture or there is some agricultural produce. Any service in relation to agriculture or any service in relation to agricultural produce is exempted. That is the first exemption you can see. Any service in relation to agriculture or agricultural produce is exempted. Okay. So, someone, you are doing agriculture pa, and I am providing service to you. Now my service is exempted. You have agricultural produce pa. For that I provide the service, that is exempted. Can you give me examples of service in relation to agricultural produce? Storage, packing, correct? Warehousing, that's what, storage or warehousing, packing. Then even, so with respect to like segregating, quality, grading, okay, all these are service in relation to agricultural produce. Can you give me examples of service in relation to agriculture? Renting of tractors, renting of equipments for ploughing, etc. And then, so we are providing harvesting service. For that manpower supply we are providing. Then seed testing, soil testing. So all these are examples of service in relation to agriculture. Now, any service in relation to agriculture or agricultural produce is exempted. Now, first we need to know what is the meaning of agriculture. Agriculture means cultivation of plants. What plants? Is it related to food or even not related to food? Not related to food also. Example, teakwood plantation. Teakwood plantation is for food. No. Then we have tobacco plant plantation. Food. No. Floriculture, flowers. Flower plantations. Is it for food? No. Rubber plantation, not for food. So, plantation can be for any purpose, it will come under agriculture. So, that plantation may be for food or not for food, it will come under agriculture. So, cultivation of plants. Then, rearing of all life forms of animals except rearing of horses for food, fiber, fuel, raw material or other similar products. So, rearing of life forms of animals for food. What is the example of rearing of life forms of animals for food? So, poultry, fisheries, etc. are example of food. Then, fiber, sericulture, silkworm farming. Silkworm, sheep farming is for fiber. That is raw material, like silk, wool, etc. Then, fuel, cattle farming. So, cow or cattle farming, for what purpose? We use that as fuel for ploughing. Instead of tractors, we use the cattle for ploughing. So, therefore, fuel. Raw material, example, honeybee farming. Honeybee farming is for creating the honey, that is a raw material for many products. Honeybee farming or any other similar products like pig farming or sheep farming, goat farming, all these will be coming under rearing of all life forms of animals except rearing of horses. Why? Because horses are not used in agriculture. Food? No. Fiber? No. Fuel? No. Fuel related to agriculture. We will not use horses for ploughing. Okay, cannot use cattle we can use, horses and all. So, some 2-3 acres it will plough, okay, and so that is not possible. Horses, you cannot control the horses for ploughing purpose. So, no way connected to fuel. Then, raw material or other similar products. Then, why only horses are excluded? Why not other animals? So, lion, tiger, etc. and all. That is not allowed for rearing. Rearing means taking care of for reproduction. Taking care of for reproduction is known as rearing. Is it allowed? Tiger and all you can keep at home and rear it? No, not possible. Okay, it will kill you, eat you and go. So, no. So, it is not allowed for rearing. So, those animals which are allowed for rearing, in that horses is excluded. Okay. So, all other animals are covered. Okay. Then, so what is the meaning of agriculture? Tell me, because whenever you see renting of agro machinery 20 lakhs, answer is what? Renting of agro machinery 20 lakhs, answer is exempted. But why it is exempted we need to write. So we need to write any service in relation to agriculture or agricultural produce is exempted. Agriculture means cultivation of plants and rearing of life forms of animals for food, fiber, fuel, raw material or any other similar products. In the present case, renting of agro machinery is for agriculture, therefore it is exempted. Like that we need to write. Understood? So next. So can you tell me agriculture definition once? Cultivation of plants and rearing of life forms of animals. For what purpose? Food, fiber, fuel, raw material or any other similar produce or similar products. Then any service in relation to agricultural produce is also exempted. So what is agricultural produce? The primary produce out of agriculture on which no processing is done or some processing as is usually done by a cultivator which does not alter its essential characteristics. Example, so tender coconut, is it agricultural produce? Tender coconut, yes, the primary produce out of agriculture. So tender coconut is agricultural produce. Now the tender coconut, we dry it for some days and remove a layer and we get a coconut. So some process is done. Who is doing this process? Cultivator. So what they do, they keep it for some 10 days or 15 days. They peel off a layer and inside we get the coconut. So therefore that coconut is still agricultural produce. Why? So agricultural produce means the primary produce out of agriculture on which no processing is done or some processing as is usually done by a cultivator which does not alter its essential characteristics. After removing a layer in the tender coconut, whether we got apple? No, coconut only. So therefore essential characteristics have not changed. Now that coconut we sun dry it for some more days, the water content is absorbed and we open the shell, we get the copra, dry coconut. So even that is also agricultural produce. So because still it is a process which is done by a cultivator which does not alter its essential characteristics. If that copra, we extract the oil out of it. So because once the water content is absorbed, so then when you crush it, we get the coconut oil. So that coconut oil will be coming under agricultural produce? No, essential characteristics have been changed, so that is not an agricultural produce. Then, is sugarcane agricultural produce? What about jaggery and sugar? No, that is processed, that is not agricultural produce. Is tomato agricultural produce? Tomato ketchup? That is not agricultural produce. Then tea. No, tea leaves is agricultural produce, tea is processed. Coffee berries is agricultural produce, but coffee is processed. Rice? No. Then what is agricultural produce? Paddy. Why rice is not an agricultural produce? Because it is not usually done by the cultivator, correct? Such processing is done as is usually done by a cultivator or producer. Usually who will do paddy to rice? Usually paddy to rice who will do? Conversion. Rice mills, not by the cultivator. Like exception is there. Sometimes cultivators will do, but usually who will do? Usually who will do? Rice mills. That's the reason why rice is not an agricultural produce. Paddy is an agricultural produce, but rice is not an agricultural produce. Understood or not? Then, in relation to rice, even though rice is not an agricultural produce, but in relation to rice, we have some activities which are exempted. What are they? Loading, unloading, packing and storage of rice is exempted. 4 activities. What about these 4 activities for agricultural produce? Anyhow exempted. Not only these 4 activities, any activity in relation to agricultural produce is exempted. As rice is not an agricultural produce, separately these 4 activities are given. Okay. What are the 2 points you need to remember? Come on. Any service in relation to agriculture or agricultural produce is exempted. Second exemption, loading, unloading, packing and storage or warehousing of rice is exempted. Now, only 4 exemptions we have. So, 2 we have completed. Now, third point, artificial insemination of livestock is exempted. Through injections, we make the reproduction. So that egg or broilers or even cattle, injections we give for reproduction. that is known as artificial insemination. This artificial insemination is not service in relation to agriculture, but it is connected to agriculture. That's the reason why separately exemption is given. Then fourth point, service by way of storage of, previously big list of goods was there. Cereals and pulses, jaggery, raw vegetable fibers such as cotton, flax, jute, etc. like that list was there. But now everything is omitted. Now only storage and warehousing of cereals and pulses and minor forest produce is exempted. All other goods will be taxable. Previously storage and warehousing of cotton, etc. was exempted. Even tea and coffee exempted. Nuts and spices exempted. Now everything is removed. So which means it will be taxable. So now storage and warehousing of what is exempted? Whether cereals and pulses are agricultural produce? Partly yes, partly no. Because if you take the whole grain, for example, channa, if you take black channa or white channa, that is agricultural produce. From the plant we get it. And we dry it in the sun. So that is what this Kabuli channa, black color one or white color ones. And this particular channa, if you process it again, so if you remove the husk and you split it, polish it, etc., we get the tur dal and gram dal. So therefore, pulses can be partly agricultural produce, partly not agricultural produce. That's why fully they have given as exemption. Storage and warehousing of agricultural produce is anyhow exempted. But cereals and pulses, even though not agricultural produce, separately it is exempted. Same way, minor forest produce. Minor forest produce is also not agricultural produce. Minor forest produce means, so Ayurvedic herbs, bamboo or honey, forest honey, these are all available in the forest. No one is going there and cultivating. So it will not come under agricultural produce. Even though it is not agricultural produce, but its storage is exempted. So these are the 4 points that we have with respect to agriculture related service. Previously, lot of points were there. Slaughtering of animals exempted, like that one point was there. Now it is omitted. Now it is taxable. And then fumigation in a warehouse to keep agricultural produce, like that one point was there. That is also not taxable. So in relation to agriculture service, what are the only 4 exemptions that we have? Come on. Any service in relation to agriculture or agricultural produce exempted. Number 2. Rice, for rice, loading, unloading, storage, packing. Okay. 3rd, artificial insemination of livestock. 4, storage and warehousing of cereals and pulses, minor forest produce. Okay, pa? Apart from these 4, any other service in relation to agriculture is taxable. Then, banking and other financial services. Next one. In banking and other financial services, previously, for RBI, any service provided by RBI was exempted. Now that exemption is omitted. Means RBI, everything will be taxable. Service provided by RBI taxable, service provided to RBI is taxable. In relation to RBI, everything is taxable. Is it clear? So now amendment is that all activities of RBI is taxable. Service provided to RBI or services provided by RBI. But only in 2 places it will come under RCM. What are those 2 places? Come on. Superior Overseeing Committee to RBI. Then import of service by RBI. Import of service by RBI. Because in case of import of service by RBI, import of service is also covered under RCM, na? So only these 2. Previously, import of service in relation to management of forex reserves was exempted. One exemption was there. That also omitted. So now for RBI, what is that? You need to remember updated provisions. All services provided by RBI and to RBI will be taxable. In that case, overseeing committee service to RBI and import of service by RBI is only covered under RCM. Its remaining and all is covered under FCM. Can you remember this here? Then next, transaction in money. Transaction in money is divided into 2. For separate consideration or without consideration. If transaction in money is without consideration, is it treated as goods or services? No, neither goods nor services. We studied yesterday. goods definition and service definition excludes money. So transaction in money without consideration is neither goods nor services. But transaction in money for a separate consideration is treated as supply of service. But then also two considerations will be exempted. What are they? Interest or discount is exempted and any other consideration will be taxable. What about interest on credit card? Taxable or exempted? Interest on credit card, taxable. So any other consideration including interest in case of credit card is taxable. Interest on housing loan, exempted. Discount on bill of exchange, exempted. Interest on personal loan, exempted. Interest on credit card, taxable. Okay. Now, then finance charges, documentation charges, processing fee, NEFT, RTGS charges, debit card, credit card charges. You understood? So any other consideration will be taxable, including interest in case of credit cards. And we don't have any RCM in this case, FCM only. Then number 3, services provided by banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. Under PMJDY scheme, lot of nil balance accounts were opened. For that nil balance accounts, why it is mainly opened is to transfer the LPG subsidy. Now LPG subsidy is not there, okay, and even then those accounts are there. But these account holders will be receiving some services from the bank. With respect to those services, bank will collect some amount. That amount collected by bank is exempted. What if these amounts are collected from normal savings account holders? Taxable. So only from savings account holders under which scheme? PMJDY scheme, then the money collected from them is exempted. Is it clear? So what is the third point? Services provided by bank to savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. Then number 4, forex transactions including money changing, foreign exchange transactions including money changing, that is conversion from one currency to another currency. Then if it is between banks, between forex dealers, between banks and forex dealers, it is exempted. So then when it will be taxable? If the said activity is between bank or forex dealer and the customer, then only it will be taxable under FCM. Okay. So forex transaction between banks, exempted. Between forex dealers, exempted. Between bank and forex dealers also exempted. Only one case taxable. Which case? Bank or forex dealer and the customer. Then it will be taxable under FCM. Then look into the next point, point number 5. Processing fee. That is, whenever you make a card payment. So in the swiping machine, when you use your card and make the payment, so whether full amount is received by the vendor, you go to a shop, you swipe your card and you make the payment. Now whatever payment you made, full amount will be received by the vendor? No. Usually that POS device, the point of sale device, whomsoever supplied, that bank will be collecting some processing fee. That processing fee will be between 1% to 3%. On that processing fee, there is GST. Is it clear? On that processing fee, there is GST. Why? Because that processing fee is other consideration. Am I right? That processing fee is other consideration. So on that processing fee, GST is there. However, if the transaction amount is 2000 rupees, then also processing fee will be there. But on that processing fee, GST is exempted. Is it clear? Sir, whenever you make the card payment, the money will be credited, debited in your account and credited to vendor account. But when it is credited in vendor account, some processing fee will be deducted. But that particular processing fee will be chargeable to GST. However, if the swipe amount does not exceed 2000 rupees, even then processing fee will be there. But that processing fee is exempted from GST. Is it clear? Now, say payment gateways are there. For example, I have a website. In that website, I am listing the book. Price of the book, say 500 rupees. Now, 500 rupees does not exceed 2000. Now, you make the payment through Paytm or Razorpay, etc. You will make the payment. Whether I will receive full 500 rupees? No. So there will be processing fee. Whether GST on this processing fee is taxable or exempted? Taxable. Taxable. Because only in case of card payment, this exemption is applicable. Not in case of e-commerce payments. Okay. Using your mobile, online payments you make, there this exemption is not applicable. This is only in case of card payment. Is it clear? So exemption not applicable in case of e-commerce payment. Underline that card. Debit card, credit card, charge card or any other card service. Only in case of card payments, this service exemption is applicable. GST on processing fee for a transaction up to 2000 is exempted. What if the payment is through online payment gateway? Then there will be processing fee. Even though the amount does not exceed 2000, even then it will be taxable. That is GST payable on that processing fee. In case of UPI payment, sir, UPI payment, there is no processing fee. If it is like limited number of transactions in a year, there is no processing fee. So therefore, there is no question of GST on that. You understood? Generally, GPay and all, when you pay, there won't be any deduction, processing fee, full amount. If you scan and pay 500, full 500 rupees will be credited to me. So therefore, UPI payment you should make. Okay. So therefore, why people encourage UPI payment is because of that. Why GPay, UPI payments they encourage is this reason. There is no processing fee and all there. But now they have given some limited number of transactions. This many transactions only without processing fee. Thereafter there is processing fee like that. Then once the processing fee comes, whether GST is applicable on the processing fee? Yes, always, whatever may be the amount. But exception is this place. What is that? If it is a card payment, and in that card payment, if the amount does not exceed 2000, then processing fee will be there. But on that processing fee, there is no GST. Are you understanding? Respond here. Then next one, business facilitator to banking company in rural area. That is, we have discussed in RCM, business facilitator to banking company. Now, if that business facilitator is working in rural area branch, the commission earned by the business facilitator is exempted. For example, see this. There is a business facilitator, Mr. A, who is appointed for the rural area branch. Now, he provides services to the rural area branch and receives a commission. That commission is exempted. Now, Mr. A will appoint a sub-agent, Mr. X. Who is this Mr. X? Agent of business facilitator. Now, he gets the commission. That commission is also exempted. So, if the main agent's commission is exempted, sub-agent's commission is also exempted. Then, what if they are appointed as agent of business facilitator in urban area branch? For example, if Mr. B is appointed as business facilitator for urban area branch and Mr. B provides services to urban area branch and gets some commission, whether this commission will be taxable? Yes. But on this commission, who will pay GST? Bank or financial institution, because we studied now 5 agents. In that 5 agent, business facilitator to banking company is covered under RCM. So bank will pay GST under RCM. Now Mr. Y is appointed as agent of Mr. B. Now Y will provide service to Mr. B and gets a commission from B. As B's commission is taxable, Y's commission is also taxable. If the main agent's commission is taxable, sub-agent's commission is also taxable. But is this covered under RCM? No. Agent of business facilitator to business facilitator not covered under RCM. Only agent of business correspondent to business correspondent. What are the 5 agents covered under RCM? Please respond. Insurance agent to insurance company, recovery agent to bank, financial institution, NBFC, then direct selling agent to bank, business facilitator to bank, agent of business correspondent to business correspondent. But agent of business facilitator to business facilitator, is it there? No. Means it will be FCM. So who will pay? Agent of business facilitator will pay. From this chart, what is that you can remember in 2 simple points? Business facilitator, agent of business facilitator earning commission from rural area is exempted. And business facilitator shall never pay GST on their outward supply and inward supply. Correct? Check. On outward supply, who will pay? Bank. On inward supply, who will pay? Agent. Means business facilitator shall never pay GST on their outward supplies and inward supplies. So please write down that. 2 points you need to remember from this chart. Business facilitator or agent of business facilitator earning commission from rural area is exempted. Earning commission from rural area is exempted. Business facilitator or agent of business facilitator earning commission from rural area is exempted. Second point, business facilitator shall never pay GST, on inward and outward supplies. On inward and outward supplies. Business facilitator shall never pay GST on inward and outward supplies. On inward supplies, who will pay GST? Okay, so never pay GST to government. Never pay GST means you will think that it has exempted. No. So whenever it is taxable, so who will pay GST? So for outward supplies, bank. For inward supply, agent. Okay. Then same way business correspondent you see. There is a business correspondent. What is the difference between business facilitator and business correspondent? Business facilitators are mere remittance agents. They will not do any other work. But business correspondent do lot of banking operations. Okay. Now, business correspondent, Mr. A is appointed for rural area branch. Now, provides service to rural area branch and gets a commission. Taxable or exempted? Exempted. Just like business facilitator. Same way Mr. A appoints Mr. X as the agent of business correspondent. As the main agent commission is exempted, sub-agent commission is also exempted. And suppose if Mr. B is appointed as business correspondent for urban area branch and gets a commission, that commission will be taxable. And is it covered under RCM? Why it is not covered under RCM? Because business correspondent to bank is not covered under RCM. So FCM, who will pay GST? Business correspondent shall pay GST. Then Mr. Y is providing services to Mr. B, for which B gives commission. As B's commission is taxable, Y's commission is also taxable. So if the main agent's commission is taxable, sub-agent's commission is also taxable. And whether this is covered under RCM? Yes, because agent of business correspondent to business correspondent, it is covered under RCM. So what are the 2 points you can remember here? Come on. Business correspondent or agent of business correspondent earning commission from rural area, is exempted. Rural area is exempted. Then next point, business correspondent shall always pay GST to government on inward supply, outward supply. Check. On inward supply they are paying, on outward supply also they are only paying. So business correspondent shall always pay GST, to government on inward and outward supplies. On inward and outward supplies. So for these two, what is that you need to remember? Business correspondent, business facilitator services. Total 4 points you need to remember. Come on. Business facilitator, agent of business facilitator, earning commission from rural area, exempted. Business facilitator shall never pay GST to government on outward supplies and inward supplies. Then for business correspondent, agent of business correspondent earning commission from rural area is exempted. Then business correspondent shall always pay GST to government on inward supplies and outward supplies. Okay. So we completed banking and other financial service. So two service we completed, service in relation to agriculture and banking and other financial service. So we'll take a break and we'll meet at 11:10. Okay, we'll start. So have a look into page number 107, healthcare services. See, in relation to healthcare services, previously we had 4 exemptions and they have omitted 2 exemptions. That is cord blood banks which used to preserve stem cells and they will collect some amount. Previously it was exempted and now that is omitted, which means it will become taxable. Same way, biomedical waste treatment operators. So previously that service was exempted and now it is omitted, which means it will be taxable. So now we have only 2 exemptions. One is healthcare service in relation to human beings is exempted. Healthcare service in relation to animals or birds is exempted. Only 2 exemptions. What are they? Healthcare service in relation to human beings. Then healthcare service in relation to animals or birds. Now, what is the meaning of healthcare service? Healthcare service means treatment, that is, so surgery or operation, etc. Treatment. And before treatment, what they do? Diagnosis. And after treatment, what they do? Care. So these 3, diagnosis, treatment and care. For what? For any disease, illness, injury, pregnancy. In any recognized system of medicine. So what is recognized system of medicine? Usually it will be given in the question itself. So even otherwise you should be knowing that allopathy, homeopathy, Siddha, Ayurvedic, Unani, all these are considered as recognized system of medicine. Even yoga is also considered as recognized system of medicine. Including transportation in an ambulance, but does not include, healthcare service does not include cosmetic surgery, plastic surgery and hair transplantation. These 3 will not come under healthcare services. However, these 3 will come under healthcare service if it is to restore the body parts affected due to congenital defects, developmental abnormalities, injury or trauma. So, listen, cosmetic surgery, plastic surgery and hair transplantation will not come under healthcare services. But if these 3 are carried out to restore the anatomy of body parts affected due to congenital defects means by birth. By birth, if there is any issue, for that if they receive cosmetic, for example, a baby born with a cleft lip means broken lip. So then cosmetic surgery will be done. So that will be coming under healthcare service, yes. Then a person met with a fire accident and fully the skin is burnt. So then plastic surgery is done. So will it be coming under healthcare service? Yes. Then developmental abnormalities. During the growth stage, there could be some imbalances between the left leg, left shoulder, right shoulder, etc. Some cosmetic surgery is done. Will that also be coming under healthcare service? Yes. So what is the meaning of healthcare service? You have to remember the definition, very important. So healthcare services means diagnosis, treatment and care. For what? Any disease, illness, injury, pregnancy in any system of medicine. But healthcare service do not include 3 things: cosmetic surgery, plastic surgery and hair transplantation. But these 3 also will come under healthcare service when? If carried out to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma. Okay. Then includes ambulance service also. And healthcare services provided in a clinical establishment by an authorized medical practitioner or by a paramedics, including ambulance service, is exempted. This ambulance service is covered separately as well as in the healthcare service. What is the difference? Whether the ambulance service is part of healthcare or not part of healthcare, if it is used for transportation of the patient, it is exempted. For example, renting of ambulance, taxable or exempted? Taxable. It is not for transportation of patient. I am giving the ambulance on rent to you and you pay the rental charges. It is not taxable. Suppose if I am transporting a patient in ambulance, but I am not providing the healthcare service, just ambulance rent. Ambulance is used for transportation of passenger, transportation of patient, then exempted. For example, I have a medical center. In my medical center, I am not providing treatment to that patient, but I have provided the ambulance facility for transporting that patient. I collected some money. Am I going to provide any healthcare service? No. So now in that case, taxable or exempted? Exempted. So this is not a part of healthcare. Now one hospital is providing ambulance service. That is also exempted. But renting of ambulance or transportation of passengers in ambulance. One ambulance is taking a patient. Drop the patient in the hospital. Return, it has to come empty. So therefore they have boarded 5 people and collected each person 100 rupees, 500 rupees. Taxable or exempted, appa? Taxable. That is not transportation of a patient. So apart from transportation of patient, any other ambulance service will be taxable. Understood? Only transportation of a patient in ambulance is exempted. Then who is an authorized medical practitioner? So any person with a minimum MBBS degree and is registered with medical council is called as a authorized medical practitioner. Or paramedics. Who will be paramedics? Those who assist the authorized medical practitioner, like nurse, lab technician, physiotherapist, compounder, they will be called as paramedics. Their service is also exempted. And where this service should be provided? In a clinical establishment. Clinical establishment means hospital, nursing home, clinic, or any other place where healthcare service is provided will become a clinical establishment. If a doctor comes to your house and do the treatment and collect money, will that also be exempted? Yes. So any place where even patient's house where the doctor visits and they collect money, that will also be treated as exempted. Okay. So therefore, what is a healthcare service that is exempted? Healthcare service provided in a clinical establishment or by an authorized medical practitioner or paramedics, including ambulance service, is exempted. Okay. Then healthcare service in relation to animals or birds is exempted. These are the 2 exemptions. Now we have some special points in relation to this. Previously, room charges was fully exempted, but now in relation to room charges, they have brought some taxability. This is an amendment. Previously, room charges collected by hospital was fully exempted, but now if it is ICU charges, intensive care unit charges or critical care unit charges or intensive critical care unit charges or neonatal intensive care unit charges, this is for kids, pediatrics, okay, neonatal. So all these 4 are ICU charges, in single ICU charges. ICU charges will be exempted, whatever may be the charges per day. It can be 1 lakh rupees per day or 50,000 per day or 10,000 per day, fully it is exempted. But other room charges will be exempted if the charges does not exceed 5,000 rupees per day. If the charges exceeds 5,000 rupees per day, entirely it will be taxable. So very, very important, definitely this can be tested. So hospital collecting room charges for providing room to the patients. Now, if that room charges is 4,000 rupees per day, what is your answer? Exempted. 5,000 rupees per day, exempted. 6,000 rupees per day, entirely taxable. Entirely taxable. Then next one, food supplied to inpatients. So who are inpatients? Those who are admitted in the hospital is known as inpatients, is part of healthcare service and it is exempted. Okay. What about food supplied to outpatients? Outpatients means those who come for consultation. Outpatients or visitors or staff, etc. That will be taxable. Only food supplied to inpatients is part of healthcare service, that is exempted. Then service provided by consulting doctors to hospitals is also exempted. Generally, when we go to a hospital to have a consultation, outpatient consultation, we pay to the hospital some 500 rupees. And out of that 500 rupees, hospital will share 300 rupees with the doctor. 200 rupees hospital will retain. So now the 300 rupees collected by doctor also exempted and that 500 rupees collected by hospital also exempted. So but the doctor is an employee there, na sir? No, doctor is not an employee there. Doctor is a freelancer there. which means he is not an employee, but every time patient comes, out of the money collected from the patient, a percentage will be given to the doctor. So that money collected by doctor also exempted. Under which ground? Services provided by authorized medical practitioner. Then money collected by hospital also exempted. Under which ground? Services provided by clinical establishment. Okay. Then next, services provided by rehab professionals. These rehab professionals will mainly provide the counseling, care and counseling to patients who are having some kind of addiction towards drugs or depressed or some kind of mental issues. So for them, so these rehab professionals will provide the services. So where these rehab professionals will provide service? Either in medical establishments or in educational institutions or in rehab centers. Medical establishments, if they are providing services, that service will be exempted. Let that medical establishment be a government medical establishment or trust or a private medical establishment, it is exempted. Clear? If suppose that rehab professionals is working in educational institutions, let it be government or trust or private, fully it is exempted. But if they are working in rehab centers, mainly in rehab centers, so addictions like smoking or alcohol addiction or drug addictions, etc. So these rehab centers, if it is a government or trust-owned rehab center, then that rehab professional service is exempted. If it is a private rehab center, then this rehab professional service will be taxable. So when it comes to medical establishments and educational institutions, let it be government or trust or private, it is exempted. But when it comes to rehab centers, only trust or government rehab center exempted. Private rehab center, rehab professional service will be taxable. Then next, there is a hospital which provided food to the inpatients. So that food supplied to inpatients, inpatients means those who are admitted there. Is it taxable or exempted? Exempted. Suppose if the food is supplied to outpatients, visitors or staff, then taxable. Now hospital is giving their premises on rent to an outdoor caterer. Whether that renting is healthcare service? No. So that renting will be taxable. Now this outdoor caterer will supply food to whom? To the outpatients. So therefore that will be taxable. Then hospital is giving their premises on rent to sell the medicines to a pharmacy. Now that renting will be taxable. Now this pharmacy selling medicines to inpatients, exempted. Selling medicines to outpatients, that will be taxable. Basically, outdoor caterer is not allowed to supply food to the inpatients. But if outdoor caterer is supplying food to the inpatients, it is treated as sold to outpatients only and it will be taxable. Is it clear? So generally outdoor caterers, because hospital only should supply food to the inpatients. When they give the premises on rent to an outdoor caterer, that outdoor caterer is not supposed to supply food to the inpatients. Even if that outdoor caterer supply food to the inpatients, that will be treated on par with supply to outpatients and that will become taxable. Understood? Then we completed healthcare service. Look into the next one, entry tickets. There are some entry tickets which are exempted irrespective of the ticket price, and some entry tickets are exempted only if the ticket price does not exceed 500. Now, first, irrespective of the ticket price, we have 8 entry tickets which are exempted. So, first, 3 related to animals. 3 related to animals. Zoo, tiger reserve and wildlife sanctuary. 3 related to animals. Zoo, tiger reserve, wildlife sanctuary. These 3 related to animals. Then, 3 places, that is museum, then national park and entry to protected monuments. Okay, 3 places. What are those 3 places? Museum, national park, entry to protected monuments. Protected monuments like Taj Mahal, Red Fort, etc. So entry to protected monuments. Then 2 sporting events. That is FIFA Women's World Cup 2020 and AFC Women's Asia Cup 2022. So total 8 tickets which are exempted irrespective of ticket price. So tell me what are the first 3 related to animals. zoo, tiger reserve, wildlife sanctuary. Then 3 places, museum, national park, protected monuments. Then 2 sporting events, FIFA Women's World Cup 2020, AFC Women's Asia Cup 2022. These were already happened. So, but this point may be given in exam, may not be given in exam. If it is given in exam, we should know, that's why we discussed. Then, there are 9 entry tickets which are exempted if the ticket price does not exceed 500 rupees. What are they? 4 performance related. 4 performance related. That is, so dance, theatrical performance, concert and musical performance. These 4 performance related. So dance, music. So music, then music also includes concert and theatrical performance, that is drama, stage shows, etc. Then we have 4 events, circus, award function, then pageant and sporting event. Pageant means beauty show. Then sporting event, it can be any sporting event, recognized or unrecognized sporting event. 4 events, what are they? Circus, award function, pageant and sporting event. And 1 place, that is planetarium. Now, what about cinema theatre? Whether it will be exempted if the ticket price is 400 rupees? Why? Not given in this list. Therefore, it will be taxable. What about stand-up comedy show? Stand-up comedy show. Ticket price does not exceed 500. Taxable or exempted? Exempted. It comes under theatrical performance. So theatrical performance includes not only drama, any kind of theatrical performance. So even stand-up comedy is also a theatrical performance. So that is also coming under exempted. Then entry to theme park, national park, etc. Entry to national park, exempted irrespective of ticket price. Entry to water park, theme parks, taxable. So that is not given in the list. Understood here? So what are the 9 entry tickets exempted? Ticket price does not exceed 500. 4 performance related. Dance, music, concert, theatrical performance. Then 4 events, circus, so award function, pageant, sporting event, and 1 place, that is planetarium. Then next, pension services. Contribution under Atal Pension Yojana or any state government operated pension fund is exempted. There are a lot of people who are providing the pension services. So private people also, lot of people are there. So definitely the future, lot of people who are future oriented will be doing this pension services. So what is this pension services? We have a active life up to 55 years. And during that active life, we need to invest. And after 55 years, that is not an active life. So still, we will be able to generate the income. So for that, lot of people like ICICI, even Zerodha or brokerage companies, banks, financial institutions, insurance companies, lot of people are doing. But only 2 pension services is exempted. What are they? Atal Pension Yojana, that is central government scheme, and like that any state government pension scheme. These 2 pension schemes is only exempted. One is central government, another is state government. Central government pension scheme name is Atal Pension Yojana or any pension scheme of state government. Then, so what they will do? Monthly they will collect some contribution up to your retirement age, and after retirement, so every month they will pay out of that contribution. So therefore, this monthly they are collecting now, that amount collected will be exempted. What if a private company or an insurance company is collecting this amount? Will it be taxable or exempted? Taxable. Then insurance services. Total 5 insurance services which are exempted. Group life insurance services. Group life insurance services means, so like group of people will form an insurance fund. So monthly they contribute, that group will contribute some amount towards the insurance fund. And if any member in that group dies, then out of that group insurance fund, amount will be paid to that member. That is known as group insurance fund. We have group insurance fund for every person. So like every professional, traders, all traders will have one group insurance fund. All chartered accountants are having one ICI benevolent fund. Like that, cost accountants, company secretaries, so doctors, like that, any group of people, group of professionals or group of people can have a group insurance fund. But not all group insurance funds are exempted. Only the specified group insurance funds are exempted. What are they? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. 5 group insurance funds are exempted. What are they? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. Then, next point, services of general insurance business. There is an insurance company. That insurance company can be government insurance company or a private insurance company. That insurance company is providing general insurance services, but that particular insurance scheme is notified by government. So then the premium collected against that insurance policy will be exempted. Why government will notify the schemes? Definitely, if it is related to agriculture and farmers or below poverty line or women and unemployed. So therefore, whenever you read that policy, for example, premium collected under hut insurance, premium collected under hut insurance to whom pa? Who will live in hut? Below poverty line. Therefore, it is a notified insurance scheme. Therefore, money collected, premium collected will be exempted. Then, coconut palm insurance. Coconut palm insurance. Premium collected under coconut palm insurance scheme. Now, agriculture and farmers. Therefore, money collected will be exempted. Then, so premium collected with respect to Suraksha Bima Yojana for self-employed women, then again exempted where it is for women. You understood? See, definitely if they coin a question, that should be on notified service only. They cannot create a new service. Is it clear? So therefore, you just remember this, there is a general insurance company. That general insurance company is providing services under government notified schemes for which the premium is collected. The premium collected is exempted. You understood here this? Then same way, there is a life insurance company. That life insurance company can be government life insurance company or a private life insurance company. But they provide the services under government notified schemes. How do you know that it is a government notified scheme? It will end with the word Yojana. Pradhana Mantri Bima Yojana, Pradhana Mantri Suraksha Bima Yojana, Aam Aadmi Bima Yojana. This Yojana and all, if you see, definitely it is a government scheme because private people and all will not keep this Yojana word. You understood or not? So it is a government scheme. So therefore, money collected will be exempted. Then micro life insurance having sum assured as 2 lakhs. Not all micro life insurance is exempted. First, it should be a micro life insurance and the sum assured should not exceed 2 lakhs. What if it is a micro life insurance with sum assured 4 lakhs? Premium collected will be taxable. So it should be a micro life insurance and the premium collected should not exceed 2 lakhs. Then insurance services provided to government. So government will also want some property, government employees, etc. So they will also take insurance now. So whenever an insurance company is providing insurance services to government, they collect premium from the government. That premium collected from the government is exempted. Let it be life insurance or general insurance. Then reinsurance of any exempted insurance service is also exempted. What is this? If the main insurance service is exempted, its reinsurance is also exempted. So insurance company will take reinsurance with another insurance company to mitigate their risk exposure. For example, government has taken insurance with respect to its airport. Airport is 200 crores. So 200 crores is the risk exposure. So now what an insurance company will do to reduce that risk exposure, they will try to take reinsurance with another insurance company and they will share the premium what they get with another insurance company. Whatever premium they get is exempted. Why? Under 4th point, insurance service to government is exempted. As insurance service to government is exempted, its reinsurance is also exempted. Understood? Then charitable and religious service. In this charitable and religious service, there is a charitable trust registered under 12AA or 12AB of Income Tax Act, and they provide certain charitable activities. Those charitable activities is only exempted. First, public health. Public health means what? Creating awareness about the COVID virus, or creating awareness about family planning, HIV. These are all examples of public health. Then, but anyhow, healthcare service is exempted now. Anyhow, healthcare service is exempted. So this public health is also exempted. Then number 2, religion, spirituality, yoga. Advancement of religion, spirituality and yoga. So all these Babas and Swamijis, so who make money by advancing religion, spirituality, yoga, the money earned by them will be exempted. Okay. So one such person constructed one island itself, and he is applying for separate country also in UN, and UN also giving the status as a separate country. So religion, enapa? Future irukku, paathaale theriyudhu. Appadiye irukam pola. Religion, spirituality, yoga. Advancement of religion, advancement of spirituality, yoga. Then educational programs to, third one, educational programs to orphans, physically or mentally traumatized persons, or prisoners and persons over 65 years residing in rural area. What if it is educational programs to persons over 65 years in urban area? Taxable. And to orphans, there are some orphanages. To that orphanages, some NGOs will go and will provide them education, for which those NGOs will get some money, that is exempted. Physically or mentally traumatized persons also, some training will be provided to them, money collected will be exempted. Prisoners also, so lot of education will be provided, because people believe that those who are having education will not do crime. That's a belief, but actually it is not true. People who are educated will do organized crime. Okay, no one will know that. And people who are not educated will do unorganized crime. That is the only difference. But for prisoners and all, lot of prison people will be doing graduation, etc. and all. So therefore some NGOs will go there and will provide the training to them. And persons over 65 years residing in rural area, really I don't know what education will be provided to them. Over 65 years residing in rural area. So if we take DT, IDT class and all, by the time the portion gets completed, they will die also. No? 65 years they are. So what education we will provide to them? And that service is exempted. Then number 4, environmental preservation. Environmental preservation, like some wildlife preservation or environmental preservation, that is also coming under charitable activity. Only 4 charitable activities. For these 4 charitable activities, if they collect money, then it is exempted. What are the 4 charitable activities? Number 1, public health. Number 2, religion, spirituality, yoga. Number 3, educational program. To whom? Orphans, prisoners, mentally, physically traumatized persons, or persons over 65 years in rural area. 4, environmental preservation. Apart from this, one more point is also there. If there is a central government, state government or charitable trust run a old age home, and if they provide boarding and lodging services to the people aged 60 years or more against a consideration up to 25,000 per month per member, then it is exempted. So that old age home should be run by central government, state government or charitable trust. To whom they should provide boarding and lodging services? Aged 60 years or more. How much monthly they should collect? 25,000, all inclusive. Okay, then it will be exempted. If it crosses 25,000, but it will not cross 25,000. 25,000 is too high amount. Okay, so this is exempted, but actually this exemption why government has given, I don't know, because ultimately the burden is on whom? Trust. trust will collect GST, pa. If trust collects GST, suppose if this is taxable, the trust or government will collect GST. And in turn, the burden will be on whom? So kids who send their parents to the old age home, correct? Suppose, sir, if they are not having kids, then the old age home will be free. Why old age home will be charging? So old age home charging means definitely these parents are having kids. So let the kids bear the burden with respect to those charges. So they have given exemption with respect to this. And next, so what are the two charitable activities? 4. But apart from that 4, one more point is exempted here. That is if they run a old age home. But this is not only for a charitable trust, but also by central government or state government. Then service by person by way of conduct of religious ceremony. Who will conduct religious ceremony? Priest, purohit, etc. So they conduct the religious ceremony and they collect some money for that. That money collected by them will be fully exempted. They are not required to pay any GST on that. Even if they cross 20 lakhs, 30 lakhs, 40 lakhs, whatever may be the limit, they are not required to pay GST. Okay, it's fine because at least they, put a effort and they earn money. That is exempted. But these donkeys, in the name of religion, spirituality and yoga, do nothing and they earn money and they are exempted. What logic it is, pa? So at least these people will go to some place and recite something and they will get the marriage done or get the social function completed. Fine, some effort is there. So for that effort, fine, we should give it exempted. But these people sit in one corner and speak all shit, enjoy with babes, but they will be exempted. Okay. So special services by special organization for religious pilgrimage. What are considered as religious pilgrimage? Only 2 are considered as religious pilgrimage. Kailash Manas Sarovar Yatra and Hajj Yatra. These 2 only considered as religious pilgrimage, but not by all. Only by the special organization. Means it should be a government notified organization. And if they provide this religious pilgrimage, collect money, that money collected will be exempted. Then services by specified organization. So previously we had SEBI in the list. Now SEBI is omitted. SEBI is not there. And IRDA was there in the list previously. That IRDA is also omitted. Previously SEBI and IRDA was a specified organization. If they receive any money, that will be exempted. But now that is omitted. Means SEBI earning money, taxable or exempted? Taxable. IRDA, Insurance Regulatory and Development Authority earning money, taxable or exempted? Taxable. Only these specified organizations, what are they? ESIC, Employee State Insurance Corporation, from whom they will collect money? From the factories, which provides the insurance to their workers. Then EPFO, Employee Provident Fund Organization, from whom they will collect money? Employer and employee. In salaries you would have studied, na? Employer PF contribution, employee PF contribution, that one. Then, like how EPFO is for normal employee provident fund contribution, like that CMPFO is there for coal mines, people who work in coal mines, workers. Coal mine provident fund organization, same. EPFO and the CMPFO both will provide the same service, that is provident fund. Monthly they will collect from employer, employee, they will accumulate it and thereafter it will be given to the employee, okay, like a savings. Then NCCCD refers to National Center for Cold Chain Development. They will provide the technical assistance in relation to starting a cold storage. For that they collect some money, that is exempted. Then NPS Trust, National Pension System Trust. So they collect some money for providing pension services as well as insurance services, that is exempted. Then Foreign Diplomatic Mission located in India. So who is Foreign Diplomatic Mission? Specified agencies of UN, UNESCO, UNICEF, WHO, etc. And embassies will be there in India, which provide the relationship between 2 countries, cordial relation between 2 countries. Then consulates, which will process the visa to visit their country. So the specified agencies of UN, embassy and consulate are called as foreign diplomatic missions, and they collect some money, they earn some money, that is exempted. So their outward supply is exempted. So what are the specified organizations? ESIC, EPFO, CMPFO, Coal Mine Provident Fund Organization, NPS Trust, and then NCCCD, National Center for Cold Chain Development, and Foreign Diplomatic Mission. Okay. Then, in everywhere, whatever we are coming across in exemption, wherever there is a monetary limit, if you cross that monetary limit, entirely it is taxable. For example, we have come across one place where if that is swipe amount 2000 rupees, if it exceeds 2000, entirely taxable. Then entry ticket 500, if it exceeds 500, entirely it will be taxable. Are you understanding this? But in this place, incubating services, if it exceeds that limit, only that excess amount will be taxable. So we need to understand incubate, incubator, and incubatee. China government is incubator, and in one laboratory they have developed, they have made the scientists to develop a COVID vaccine. That laboratory in Wuhan is incubate. Okay, that Wuhan is a laboratory. In that laboratory, so they have employed some scientists to create this. Okay, yes, it's a bio-war. So China will not agree to this, but we know that fact. So COVID is not natural. It is a man-made virus. So like that in future, lot of virus will be coming, and so we have to face that. No other go, because gone are the days where they used atom bombs, etc. and all for going on a war. Now it is not. So this are all waste, because weapons will be costly, but virus cheap. You understood or not? We can just release it, and so therefore in Wuhan laboratory they created this virus. So that laboratory is called as incubate. So what is incubate? Incubate is a laboratory where research will be carried out, and the owner of the laboratory, who is the owner of the laboratory? China government, incubator, and the one who developed the like technology or any virus, etc., they will be called as incubatee. That is the scientist who is working over there. Understood or not? So incubate means what? A laboratory where research is done. Incubator is the owner of that laboratory. Incubatee is the one who is working in that laboratory. Okay. Now, incubatee receives money from the incubator. That money received from the incubator is exempted up to 50 lakhs. Means if it crosses 50 lakhs, excess amount only taxable. Up to 50 lakhs is exempted. If it crosses 50 lakhs, only the excess amount will be taxable. And for this, two conditions should be satisfied for this exemption. Condition number one, previous year their gross receipts does not exceed 50 lakhs, and this exemption is available for a period of 3 years from the date of signing the contract. Understood? So, what are the conditions for exemption? Previous year aggregate receipts does not exceed 50 lakhs, and this exemption is available for a period of 3 years from the date of signing the contract. Then, incubator services is always exempted provided that incubator is approved by Government of India. What if they are not a government approved incubator? Then it will be taxable. So there should be government approved incubator. So incubator service, what is the answer? Exempted if they are approved by government, taxable if they are not approved by government. Incubating services, come on, up to 50 lakhs exempted, beyond 50 lakhs taxable, and this exemption is available if turnover during previous year does not exceed 50 lakhs, and this exemption is for a period of 3 years from the date of signing the contract. Now see this illustration in the next page. A Limited is a incubatee. First year they got gross receipt 60 lakhs, and how much is exempted? 50 lakhs is exempted. So what will be taxable? Only 10 lakhs. Second year, will they get exemption? No. Why they will not get exemption in the second year? Because previous year it exceeds 50 lakhs. So second year they will not get exemption. Second year it is 40 lakhs. So full 40 lakhs will be taxable. What about third year? Third year 70 lakhs. Whether they get exemption for the third year? Yes. Why? Because second year it does not exceed 50 lakhs. As second year it does not exceed 50 lakhs. So therefore third year they will get exemption. And therefore 70 minus 50, remaining 20 lakhs will be taxable. Next year, fourth year, will they get exemption? Why? The exemption is only for a period of 3 years. 3 years over. So, 4th year onwards, whatever may be the amount, they will not get exemption. Then, next one is education services. Education services. So, look into this fifth point first. Look into fifth point first. Service provided by an education institution to its students, faculty and staff is exempted. So, what is the meaning of an education institution? Education institution can be category 1, that is up to 12th standard. So, education starts where starting point can be any. It can be preschool or it can be play school, etc. But what is category 1? Up to 12th standard. Okay. Then category 2, education for obtaining a qualification recognized by law. What will come here? UG, PG, professional education, that will come here. Then category 3, approved vocational education, that is skill-based centers like polytechnic colleges, industrial training institute or industrial training center, so which provides diploma, that will be called as approved vocational education. Okay. So what are the 3 education institutions? Up to 12th standard, category 1, education as a part of curriculum for obtaining a qualification by law, that is category 2, colleges, etc. Then category 3, approved vocational education. If these 3 education institutions provide any service to whom? Student, faculty and staff, that service will be exempted. Now listen, suppose if ICI is collecting exam fees and registration fees from you, is it taxable or exempted? Why exempted? ICI is a second category education institution and they collect any money from you, so that will be exempted. Is it clear? Now, if a private coaching center is collecting fees from you for providing coaching, will it be taxable or exempted? Taxable. Why? Because private coaching center is not an educational institution. Same way, a school providing education and collecting school fees. So, not only school fees, book fees, not only book fees, uniform fees, not only uniform fees, extracurricular activities, bus fees, co-curricular activities, library fees, all these fees, ID card not wearing fees, so uniform not wearing fees, attendance not maintained fees, every kind of fees, hall ticket issuance fees, eligibility certificate issuance fees, then transfer certificate issuance fees, everything, mark sheet also if you are getting, you need to pay some amount. Every kind of fees collected by the school will be taxable or exempted? Exempted, because category 1 education institution. Now, a college collecting money from the corporates for allowing the corporates to interview their students and select the students. Now, whether the money received by the college from the corporate is taxable or exempted? Taxable, because that is not services provided to students, faculty and staff, that is services provided to others, so therefore it will be taxable. Then, say there is a college which will be providing bus facility to its faculty and staff. Students they will provide. So, faculty and staff, even that money collected is also exempted. Yes. So, in short, what you need to remember, any service provided by education institution to its students, faculty and staff is exempted. Education institution means up to 12th standard, education as a part of curriculum for obtaining a qualification by law, and approved vocational education. Then, now look into the first point. Generally, education institutions will be conducting entrance exam and they will collect some fee for conducting entrance exam. Whether that entrance exam fee will be exempted, because those people from whom they are collecting entrance exam fee are not yet students of that education institution. See, once they become the students of that education institution, if any amount is collected from them, it is exempted. But they are not yet students. They have to write the entrance exam. They need to qualify the entrance exam. Then only they will be given a seat there. Correct? Until that point of time, they are not students. Even then, the entrance exam fee collected by the education institution is exempted. See the first point. Service provided by education institution by way of conduct of entrance examination. But who should conduct this entrance examination here? Education institution. Against consideration in the form of entrance exam fee is exempted. Then second point, amount paid to training providers under Deen Dayal Upadhyaya Gramina Kaushal Yojana DDUGKY scheme. Under this DDUGKY scheme, so some training providers will go to the rural area and will be providing them some skills for the purpose of starting a small scale industry there, like how to make paper bags, how to make paper cups, etc., or stitching, tailoring. So these kind of skills and all will be taught to them in rural area. And based on this, either they will get some job or they will set up one small scale industry and they will earn some money. So for that purpose, these training providers will be receiving some money from Government of India. So that money earned by these training providers is exempted. Clear here? So under this DDUGKY scheme, what they do, these training providers do, they will provide training in relation to vocational education courses certified by NCVT. For doing this, they will get some money. That money earned by them will be exempted. Then number 3, services provided with respect to a training program for which 75% or more of the total expenditure is borne by central government, state government or union territory. Say, we are providing CA foundation coaching to below poverty line students or minority students. Fees is 40,000 rupees. And in this 40,000 rupees, government has given 30,000 rupees, student has given 10,000 rupees. As we are providing education to below poverty line or minority students, definitely government will come forward to pay the money. So now government has paid 30,000, student has paid 40,000. What is the government's share? How much government has given? What is the percentage given by government? 30,000 divided by 40,000. Please see how much? How much? Exactly 75%. So now, what is exempted here? Exempted or not exempted? Exempted. What is exempted? The 30,000 receipt from government is exempted, or entire 40,000 is exempted. Entire 40,000 is exempted. The training program is exempted. Can you remember this point, pa? So please understand. Here the exemption is not with respect to amount collected from the government. The exemption is what? Exemption with respect to the training program. So suppose in this example, if 25,000 is given by government and 15,000 is given by the student, then taxable or exempted? Why? Because government contribution is how much? Less than 75%. So what is taxable? Money received from student or both? Both will be taxable. Okay. Then any service provided by National Skill Development Corporation. This is one entity. NSDC is one entity set up by government. And below this NSDC there will be Sector Skill Council, and below this Sector Skill Council there will be assessment agent or training partner. These people will provide some skills like stock market training, basic computer education, animations, etc., or tally, like that. This kind of skills are provided by these people. So for that, whatever money collected by them will be exempted. So who are the 4 people, pa? NSDC, National Skill Development Corporation; SSC, Sector Skill Council; assessment agent or training partner. If they collect money from the people for providing the training, that money collected by them is exempted. Then look into the 6th point. Services provided to education institution. This is not service provided by education institution. What is the difference between 5th point and 6th point? 5th point is service provided by education institution. This is service provided to education institution. Service provided to education institution. Transportation of students, faculty and staff. So 4 activities, pa. So this is service provided to education institution. There is an education institution. To that education institution, I am providing service. What service? I am providing transportation service. I am providing security service. I am providing housekeeping service. I am providing catering service. These 4 services are provided to education institution. Which education institution? Category 1 education institution. Now I collect some money from the education institution, that will be exempted. For example, there is a college. That college is providing food to their students. Now I supplied food to the college and got some money from the college. Taxable or exempted? taxable. Why? Because college is not a category 1 education institution. Suppose if the same food is supplied to a school and I get some money from the school, whether it will be taxable or exempted? Exempted. So what are the 4 activities provided to category 1 education institution is exempted? Come on. Transportation of students, faculty and staff, security and housekeeping services, then catering services. Then this security and housekeeping service should be within premises. This security and housekeeping service should be within premises. Within premises. Then only it will be exempted. For example, one school is conducting an annual day function in one auditorium, one private auditorium. Now, for that annual day function, they received security services or housekeeping services. Whether that security and housekeeping service received by that school for that annual day function will be taxable or exempted? Taxable, because that is not within the premises. Now, in that auditorium, they are conducting the annual day, they need to provide food to the students, so they received catering service. Whether that catering service will be taxable or exempted? Exempted. Why? Because catering service provided to category 1 can be anywhere. It can be within the premises or it can be outside the premises, it will be exempted. But security and housekeeping service should be within premises, then only it will be exempted. Then next one. Admission to or conduct of examination. That is, there is an education institution which is appointing some marketing agent. That marketing agents will be doing marketing for bringing the admissions to that education institution. For every admission, that marketing agent will receive some money. That money received by the marketing agents will be exempted. So, admission to education institution. Same way, conduct of examination of that education institution. That is, I have a place and I gave this place on rent to education institution, okay, for conducting exam. Now I got some rent. Whether that rent will be taxable or exempted? Exempted. This case, why? Renting of property for what purpose? Conduct of examination. Now I set a question paper. For setting question paper, I get some money, exempted. I am invigilating, I get some money, exempted. I am doing evaluation. For doing evaluation, I get some money, exempted. All these will come under conduct of examination, that is exempted. Then, online period, whether this is exempted for all 3 category institutions? Yes. Then, online periodicals and journals, for which education institution it is required? Online periodicals and journals. Only for category 2, logically. That's why for category 2 only they have given exemption. For category 1, if they receive, taxable. Category 3, if they receive, taxable. Now tell me, what are the services provided to education institution is exempted at this point? To education institution. Transportation, security, housekeeping, catering. To category 1. In that, security and housekeeping should be within the premises. Good. And then, next one. Admission to or conduct of examination. All 3 category institutions it is exempted. Then next one, online periodicals and journals, only with respect to category 2 is exempted. Then next, training in recreational activities relating to arts and culture. This should be by an individual. Say for example, I started one dance class, okay. So, this salsa, like that one dance class. This salsa is not classical. Let it be classical or western, any kind of art. Okay, it comes under art. Yes or no? Dance school or dance classes will come under arts. Yes. Now I collected fees. The fees collected by me will be exempted. Suppose if this dance school is owned by a partnership firm, and if that partnership firm collect the money from the students for providing dance, training in dance, whether it will be taxable or exempted? Taxable. Because now there is an amendment that it should be by an individual. So this training in recreational activities relating to arts or culture should be by an individual. This is an amendment. Should be by an individual. What if it is by any other person? Taxable. Arts means what will come under arts? So all kind of extracurricular activities here, recreational activities like dancing or singing classes, music classes or painting classes, then even chess classes, okay. So all kind of arts will be coming there, including martial arts, karate classes. Then culture, it is languages, language or Vedas, Upanishads, etc. Then sports, training in recreational activities relating to sports. What is the condition here? That sports academy should register as a trust. That sports academy should register as a trust. Then only the money collected by them is exempted. There is a ABC Cricket Academy. That ABC Cricket Academy is registered as a trust. Now they will provide training in cricket for which they collect money. Taxable or exempted? Exempted. MRF Cricket Academy, which is not a trust. Now they collect some money for training in cricket. So whether the money collected by them is taxable or exempted? Taxable. Then services by assessment bodies under skill development initiative scheme. Skill development initiative scheme means, so they will invite people from the industry to review the curriculum. For reviewing the curriculum, so because people from the industry better knows what kind of skills that are required, so therefore they will review the curriculum. For reviewing the curriculum, these people from the industry get some money. So those people from the industry is known as assessment bodies. They get some money from government. That money received by them is exempted. Then this point already we discussed. Educational program where at least 75% of the total expenditure is borne by government. Okay. Even this example only I gave. CA coaching provided to BPL students for which greater than or equals to 75% of the fee is collected from state government. Such coaching is exempted. Then suppose if it is to students with disabilities, if entire expenditure is borne by government, then it will be exempted. Coaching services to students provided by coaching institutions and NGOs under central sector scheme for scholarship for students with disabilities. But here entire expenditure should be borne by government. Then the money collected will be exempted. And related to education, we have some circulars. That is, there are some maritime training institutes. These maritime training institutes will provide practical training on how to operate a ship, what are the parts of the ship, etc. to marine engineering students. So they have to undergo this practical training, then only they will be provided a degree called as marine engineering. Okay. So therefore, is this maritime training institutes coming under education institutions? Only after training they will be given qualification, correct? Which means it's a part of curriculum or not part of curriculum? Part of curriculum. So these maritime training institutes are treated as education institution. So therefore the fees collected by them will be exempted. So see this, maritime training institutes and their training courses are approved by DG, Directorate General of Shipping, which are duly recognized under the provisions of Merchant Shipping Act and are educational institutions. Therefore, fee collected by them will be exempted. Then, next, Anganwadi schools. What are Anganwadi schools? Mainly what they do, preschool, play school. So they provide the daycare facility. And also they will provide food to these students, food to the kids, correct? So now, in this case, they will cook food or they will buy food. Cook food. Some Anganwadi schools may purchase the food also, correct? Now there is an outdoor catering. That outdoor caterer provided the food to the Anganwadi schools and collected some money from Anganwadi school. Is it taxable or exempted? We have discussed services provided to education institution. Read that and tell me. Services provided to education institution. Read. Don't look at my face. Please look into the book. So look into that services provided to education institution. What are the 4 activities which is exempted to category 1? Transportation, security and housekeeping, catering. Catering is there na? And is Anganwadi school category 1 education institution? Yes. Yes. So because category 1 education institution is up to 12th standard. It includes everything. Play school, daycare, everything will be covered there. So catering service provided to category 1 education institution is exempted. So catering service provided to Anganwadi school is also covered under exemption. Then next, there are some examination boards. This examination board job is just to conduct the exam and give the rank. Depending upon that rank, the student will be joining in a college which accepts that rank. For example, NEET you take, NEET exam. National Board of Examination will be conducting NEET exam. So this NEET exam when they conduct, they give the rank, but they will not give the admission into medical college. Now depending upon that rank, this rank, for example, you got, so 208th rank. 208th rank, some colleges will accept. So therefore you can go and join in that college. You got somewhere 26,000 rank. So 26,000 rank means for that rank some colleges will accept. So you need to go and join in that college. You understood or not? So therefore this examination board, is it giving admission? No. Means whether entrance exam fee collected by them will be taxable or exempted is the question here. So now, if it is an educational institution, the entrance exam fee collected by them is exempted. That's the first point we studied. Please refer. First point you see. Any entrance exam fee collected by an educational institution is exempted. So is this examination board an educational institution or not? Yes, it is an educational institution. So therefore, even though they are not providing any education, but the entrance exam fee collected by them is called as exempted. See this. GST is exempted on services provided by central or state examination boards. So these central or state examination boards will conduct only entrance exam, and therefore based on this entrance exam we get admission to education institution. So therefore whatever fee collected by these examination boards is also exempted. Then next one, suppose if these examination boards receives any services for conducting the examination like printing of question papers or online exam services, etc. Whether that service is also exempted, please look into point number 6. Conduct of examination of all category institution is exempted, correct or not? When I provide this service by way of conduct of examination of all category institution, it is exempted. So GST is also exempt on input service relating to admission to or conduct of examination of that examination boards. Then next, this is one other point. There will be some guest anchors who will be invited, so in TV channels for hosting the show. For example, Big Boss. Big Boss show, Kamal Hassan has hosted the show, for which he will be receiving some money. So actually for one episode he will be getting 1.5 crore. Okay, for hosting one episode he will get 1.5 crore as the remuneration. One episode means 1 week, that is the count. 1 week in the sense like 2 days. So Saturday, Sunday. So 1.5 crore he will be getting. Taxable or exempted? Anywhere we studied like exempted like that? No. So that will be taxable. See that. Services provided by guest anchors invited by the TV channels for participating in their shows in lieu of honorarium attracts GST liability. However, this guest anchor's turnover does not exceed 20 lakhs. 20 lakhs. So, if it does not exceed 20 lakhs, then they are not required to register and pay GST. So, definitely their turnover and all will cross par 20 lakhs long back. Okay. When he acted as child actor itself, it would have crossed. Okay. So, see the next one. Generally, toll charges is exempted. Generally, toll charges is exempted. What is toll charges means? So, whenever we are using some roads, highways, etc., so we pay toll charges. That's okay. But who will collect the toll charges? The person who laid down the road. So, listen carefully. Government actually should lay down the road, but they don't have money, because whatever money they have, they constructed statues, buildings and all. So, they don't have money to lay down the road. Then what government will do? They will be giving this work of laying down the road to some builders. So, like GMR Properties or L&T, etc. These people, what they will do? They will lay down the road with their own money. Now they have invested. Now they need to recover that investment. Now how they will recover the investment? by collecting the toll charges from the vehicles which are going in that route. So this toll charges is actually recovery of investment, therefore toll charges is exempted. Now, if you are taking your car and going in a toll gate, if you don't have FASTag, you need to pay extra charges. You know that. If you have FASTag, the regular toll charges. If you don't have FASTag sticker, then you have to pay double. Okay. Now, these extra charges collected for not having a FASTag, is the charges also exempted? Yes. You read this point. Point number 6. The additional amount collected from the users of the road not having a functional FASTag is in the nature of toll charges and should be treated as additional toll charges. Therefore, it is clarified that additional fee collected in the form of higher toll charges from vehicles not having FASTag is also toll charges and therefore it is exempted. This is an amendment. Then next, toll charges collected by way of annuity is also exempted. Listen carefully. Toll charges collected by way of annuity is also exempted. What is this toll charges by way of annuity means? I will be using my car on a daily basis because my house is in outside the toll gate and my office is this side of the toll gate. So daily I will be coming and going. So which means every time I have to pay toll charges, which is actually costly for me. Therefore, yearly I will pay some fixed amount, that is known as toll charges by way of annuity. Rather than paying the toll charges every time I go in that route, yearly I will pay. So any number of times I operate that toll gate, I don't have to pay any extra toll charges. Is it clear or not? This is known as what? Toll charges by way of annuity. That toll charges is also exempted. Now, there is one circular here, that is, government is asking a builder to lay down a road and collect not from the people but from the government toll charges by way of annuity. You understood? Again I am repeating. Builder, instead of collecting from the people, they are collecting the annuities from whom? Government. Will it also be called as toll charges by way of annuity and is it exempted? No. Only when the money is collected from the people, then only it is exempted. If money is collected from the government, this will come under services provided to government. Therefore, that will be taxable. See this circular. GST is applicable on annuities paid for construction of a road where certain portion of the consideration is received upfront while remaining amount is made through deferred payment annuity spread over years. So therefore, annuities, toll charges by way of annuities even though exempted, but when it will be exempted only when it is collected from general public, when it is collected from government, okay, when it is collected from government for construction of road, so then it will be taxable, okay. Next, one more circular part. This is a very important one, liquidated damages. So this circular only in your supplementary study material, they have given for 4 pages. So just I have converted that entire circular into a half-page information. So this half-page, if you remember, that is sufficient. Okay. So please concentrate, control your outflow, etc. for some time and listen. Okay. So anyhow, I am giving break for every 2 hours. Then also, like in cinema theater, people are going. So control, at least 2 hours. Sugar problem you have or what? So for every 2 hours, I am giving a break. Okay. And that too, I inquired. So toilets and all also, lot of toilets are there. So then what is your problem? The time is not sufficient. So okay, fine. So but this is important area. Please control outflow and listen. Okay. Liquidated damages. Liquidated damages means like consideration on account of breach of contracts. So yesterday we discussed consideration for tolerating an act, tolerating non-performance of a contract or breach of contract, etc. That is this. So see this. First, what is liquidated damages means? When a contract has been broken, the party which suffers by such breach, The party which suffers by such breach is entitled to receive from the other party compensation for any loss or damage caused to him. That is known as liquidated damages. I entered into contract with you. You breach the contract. When you breach the contract, you pay me some compensation because I am suffering the loss because of you. So that compensation is known as liquidated damages. Is it clear? So again I am repeating. First we enter into contract and the contract has been broken by either party. Any party can break the contract. The party which suffers by such breach means which suffers the loss or which suffers the damage. So will receive a compensation from the other party who committed the breach, correct? So that compensation received for loss or damage is known as liquidated damages. Now, what is the treatment of these liquidated damages? These liquidated damages are divided into two. Mere compensation to compensate the loss or damage or injury, and it is nowhere specified in the contract. It is nowhere specified in the contract, but so we have paid that compensation even though not specified in the contract. Then this compensation will not be treated as consideration because it is not arising out of contract, correct or not? So therefore it is not treated as consideration and it will not be taxable. Example, so coal scam has happened in 1992. In that coal scam, what has happened? So first government has allocated the coal blocks to lot of people, these mining holders, to extract the coal. But these were allocated at a very less rate. So Supreme Court gave order that all the coal blocks allocated should be called back. So because there are a lot of issues in respect of this allocation, so a lot of scams has happened, so a lot of politicians are involved, so call back, government is at loss. Now all that got called back. And as a compensation, so government has paid some amount to the people to whom they already allocated the coal blocks. You understood? Is that compensation mentioned in the contract? No, not mentioned in the contract. They did not mention that if we call back the coal blocks allocation, we will pay you compensation. Like that they did not specify. So which means that this compensation payable is mere loss even though not specified. For example, one more example I will give you. Say I floated one batch. So CA final indirect tax regular batch. So I collected fees from you. And what has happened? I cancelled the batch and I returned the fees. Plus I returned to every student 5,000 rupees extra. Why? Because I cancelled the batch and you would have made an arrangement that so you will be attending these classes. So therefore I cancelled that batch. Then I gave that 5,000 rupees to you. You understood or not? Sir, why CA final? Hey, you will not come or what? You will come, no? You have intention to come, no? So just a matter of time. So this attempt you are going to qualify and next attempt onwards you will be into CA final. Simple, okay? So have the positivity part. Don't think always, whether I will clear or not like that. You will clear, yeah? If not you, who will clear? Tell me. So if not you, which idiot will be coming and sitting in this Mylapore Fine Arts Club from morning to evening? Only you will sit. So only you will clear. You understood or not? So therefore, don't have the feeling. Daily morning when you get up, no, do this. It will work out. That this attempt I am going to clear at any cost. You believe in that first. So only when you believe in that, you will be able to do the hard work. Okay, and your hard work also will be paid off. So don't think, this attempt will I clear or not? Okay, this attempt I will skip. So next attempt I will write. Sitting in the exam hall, you will think, okay, so this exam, okay, poche. So tomorrow onwards I will sit and prepare properly, like that thought will come. No. So why? You have to clear. So others are clearing, not that, that pass percentage is point something. Pass percentage is decent. That to May 23, November 23 is a stock clearance. Okay. So because May 24 is new syllabus. May 24, they don't want any kind of old stock to be continued in the new syllabus. So, they want to clear off the entire scrap. So, due to that reason, these two attempts are golden attempts, May 23, November 23. So, definitely you will be able to clear. Okay. So, have little bit of hard work. You won't believe, trust me, because I have seen 2 times this change in syllabus. Every time, that is from PCC to IPCC, IPCC to CA intermediate. 2 times I have seen. Same thing happened. When a new syllabus is going to come, the last 1 or 2 attempts will be easy. And they will give 35%, 40% also pass percentage. It happened. It happened. So therefore, you will be in that pass percentage, you are going to clear. Okay. So therefore, little bit of effort only you need to put. Don't leave this attempt. May 23 attempt, you get fever or you get dicky valley, whatever it may be. So you have to write. You understood? You have to write this attempt, and maybe you are splitting and writing one group also, fine. But May 23 and November 23, you should never miss these attempts. You have to write. Fine. So believe in yourself, you are going to clear. Okay. Now, so this amount what I paid to you, 5,000 rupees for cancellation of the batch, will that be coming under compensation arising out of contract or not out of contract? Not out of contract. Where did I agree? I did not agree. But as a gratitude I have given. So now in this case, will it be treated as consideration? No, it is not treated as consideration. Consequently, it will not be taxable. Suppose if that liquidated damages or compensation is specified in the contract, agreed between the parties, then whether these charges are in the nature of penalizing a person to discourage such act, then it is not treated as consideration and not taxable. Example, traffic fines. Traffic fine is whether it is as per the contract agreed between the parties. Yes, sir. The moment you take a driving license and you take a registration certificate for that vehicle, you are agreeing to abide by the traffic rules. So as you are agreed to abide by the traffic rules, now in that case, so you have breached the traffic rules. When you breach the traffic rules, so the traffic fine you are paying. So it is like what nature? Discouraging a persona, encouraging a persona. Discouraging a person. So therefore, it will not be treated as consideration. Same way. So check dishonor charges. Check dishonor charges is also agreed between the bank and the account holder. Now this check dishonor charges is to discourage a person or to encourage the person? Discourage the person because they don't want that to happen. Then another example, EB bill you did not pay on time, for which they collected a late fee. So this is usual, not to discourage a person, because they know that EB bill all of a sudden we will not be able to pay, so therefore we will not have money, so that's why they are giving a little extra time for which we have to pay late fee. So that late fee is other cases, not to penalize or discourage a person, but usually it is allowed. So then that will be treated as consideration, and taxability depends upon principal supply. Okay. Now, so this we will see with the examples that are provided in the circular. Okay. So this is actually given in the supplementary study material, and even I have given this in amendments material. You see this. First, coal block scam. Coal block scam for what purpose? Coal block scam. Nowhere it is specified. Nowhere it is specified, and this compensation has been given. Now, where it will come? Is it treated as consideration? No. Why it is not treated as consideration? Because it is mere compensation not arising out of contract, so not treated as consideration, not taxable. Check dishonor, fine or penalty. Is it agreed between the parties? Yes. But this is mainly to penalize a person or discourage a person, correct or not? So therefore, again, it is not treated as consideration and not taxable. Say this. Therefore, check, dishonor, fine or penalty is not a consideration for any service and not taxable. Then, penalty imposed for violation of law, where it will come? Again, discourage a person or penalizing a person. So therefore, it will not be treated as consideration. Then, forfeiture of salary or payment of bond amount in the event of an employee leaving the employment before the minimum agreed period. Notice you are not serving pa, leaving the employment without serving notice. You have to pay the money to the employer. Now where it will come? Is it like penalizing a person and discouraging a person from not doing that activity? Yes, because that should not set a bad precedence. See, not that employer is agreeing. So employer don't want that to happen. So again, this is like discouraging a person or penalizing a person. Therefore, such amounts recovered by employer are not taxable as consideration for the service of agreeing to tolerate an act. Then next one, see this, cancellation charges. Cancellation charges, train ticket cancellation charges. Train ticket cancellation charges, whether the railways wanted to penalize or discourage a person or they are agreeing to this. They are agreeing to this. Okay. Because that seat they are going to give it to other person. You understood or not? So this cancellation charges will be treated as value consideration, yes, and it will be included in the value of original supply and taxable accordingly. What does it mean? Generally, AC ticket is taxable. So the cancellation charges for AC ticket is also taxable. Sleeper class ticket is exempted. So the cancellation charges for sleeper class ticket is also exempted. Is it clear? Say this. Cancellation fee, cancellation charges of railway ticket for a class would attract GST at the same rate applicable to the class of travel. Okay, understood here? So these are some examples which are given in this circular here. So what you need to remember, first, liquidated damages, arising out of contract, not arising out of contract. Arising out of contract, what is your answer? Not treated as consideration, consequently it will not be taxable. Not arising out of contract, okay. Arising out of contract, specified in the contract agreed between the parties. Is it like penalizing a person to discourage such act? Yes. Then again it is not treated as consideration and non-taxable. Other cases, treated as consideration and taxability depends upon principal supply. If the principal supply is taxable, this liquidated damage is also taxable. If the principal supply is exempted, this liquidated damage is also exempted. That's it. So that is with respect to these circulars that we have. The next one, next area is government services. So we have completed so far education services, healthcare services, and entry tickets and various circulars that we have. Okay, banking, agriculture also over. Now looking into government services. Concentrate pa, we'll take break at 1:15. Okay, so listen, only half an hour more. Concentrate. 1 o'clock you need break. Okay, 20 minutes. Concentrate. Listen. So that is, government services is divided into two broadly. Specified activities and other activities. What are the 4 specified activities which are covered under supply? Department of Post, transportation of goods or passengers, airport or port, and services to business entities. These 4 activities are covered under supply, and all other activities of government is excluded from supply. Long back we discussed. Now concentrate on Department of Post. There is one amendment. Previously what we have learnt is speed post, express parcel post, life insurance agency service is taxable, and all other activities of Department of Post is exempted. Like that we would have studied, but actually that is amended pa. So now only 3 activities of Department of Post is exempted. What are they? Postcard, inland letter, and envelope with less than 10 grams. These 3 are only exempted. all other activities of Department of Post is now taxable under FCM. For example, speed post, taxable, express parcel post taxable, money order taxable, then we have even registered post, book post, that is also taxable, and then this Aadhaar card enrollment we have to pay some amount, that is also taxable. Like that, every other service provided by Department of Post apart from postcard, inland letter and envelope less than 10 grams. Envelope less than 10 grams means only paper can be sent. So nothing else. So that alone is exempted. All other cases taxable under FCM. These three also they should have taxed it. So simply we would have remembered everything is taxable. Then, so transportation of goods or passengers we will discuss later after this. Then services to aircraft or vessel inside or outside the precincts of a port or airport is always taxable. Transportation service depends because government transportation service and private transportation service are treated on par. So when we learn transportation, that is common between government and private. So that's why I am not discussing it here. It will be later, transportation service. Then airport or port service will always be taxable. Then services provided to business entity. The services provided to business entity, we have 14 specific exemptions and 2 general exemptions, and other cases it will be taxable. Now we are discussing the 14 specific exemptions with respect to services provided by government to business entity. So these are the 14 specified activities, specific exemptions. Previously, in this also there is an amendment. Previously, we had one point, services provided by, so municipality or panchayat under article 243G or W of the constitution is exempted like that. That point is omitted. That is not there. So we have only these 14 points, concentrate. First one, charges collected under Right to Information Act. What is that? You apply your answer sheet. You write the exam, after exam you apply for your answer sheet through RTI, free, you have to pay charges. Pay charges, those charges are exempted. So under Right to Information Act, to get the information, we pay some charges, that charges collected will be exempted. Then number 2, interdepartmental services. For example, Income Tax Department is going for a search or raid. Now Income Tax Department is going for a raid, they will definitely take the help of police department. So state government police department is providing services to income tax department, that is known as interdepartmental services. So one department of CGRSG to another department of CGRSG, that is exempted. Now sir, government will come under business entity, sir. Yes, if you see business definition, the last point in business definition is government activities is also treated as business. Please check. Segment number 2 you take. In that segment number 2, business definition you see, section 2 clause 17, general meaning and specified activities you can see. In that specified activities, so you have last activity. All activities of government is treated as business. Can you find that? So therefore, government activities are treated as business, which means government is also a business entity. Okay. Now come back to this. So interdepartmental services. Now third point, assignment of right to use telecom spectrum. Telecom spectrum means radio frequency waves. This telecom spectrum is owned by government. Government will give the telecom spectrum like 2G, 3G, 4G, etc. to telecom operators. For that, they will be collecting one-time charges and annual royalty. That one-time charges collected will be exempted, and even annual royalty collected is also exempted, provided the right, that is the telecom right or telecom license, is assigned before 1/4/2016. What if the telecom license is assigned after 1/4/2016? So it will be taxable. So telecom license should be given when? Before 1/4/2016. For that, one-time charges or annual royalty may come even in 2023. Is it clear? Still they are using now 2G, 3G. What yaar? Mobile, if you go to outskirts of Chennai, so automatically in your mobile, EDGE, GPRS and all will come, okay. So that is 2G service. So therefore, they will be downgrading the network. So still mobile networks, operators are using that network for which they will pay annual royalty. That annual royalty collected will be exempted, provided the assignment of right is before 1/4/2016. Now you read third point and fourth point and tell me what is the difference. What is the difference between third and fourth point? Third point is telecom operator, telecom spectrum. Then fourth point is natural resource. Next. Third point, both one-time charges and annual royalty exempted, but in fourth point, only one-time charges. Assignment of right to use other natural resources. Example, coal mines, bauxite mines, or any other mineral reserves, extraction, crude oil, etc. Then, assignment, fourth point, fifth point, what is the difference? Fourth and fifth point. So, fourth point is any person. Fifth point is individual farmer. And fourth point assigned before 1/4/2016. Fifth point assigned anytime. And in fifth point, both one-time charges and annual right, everything will be exempted. So, government owns land, agricultural land. That agricultural land, they will give it to the farmer for the purpose of cultivation. The farmer has to pay some royalty to the government. That royalty collected by the government is exempted. Then, next one, registration charges under any law. Can you give me an example of some registration charges? You incorporate a company, you have to pay registration charges. You buy a vehicle, you have to pay registration charges. You buy a property, you have to pay registration charges. All those registration charges are exempted. We don't have to pay GST on that. Then, safety certificate charges. Safety certificate charges means whenever there are some factories, educational institutions, hospitals, shopping complexes, malls, cinema theaters are dealing with public at large, they need to maintain necessary safety arrangements. For maintaining that safety arrangements, they need to get a certificate from a safety officer that they are maintaining that safety arrangements. For that, safety officer will give a certificate. So that safety certificate charges, that safety officer will collect some charges, that is safety certificate charges exempted. Okay. Then, fee for birth certificate, death certificate, driving license, passport, visa. These are given to individuals, na? Yes or no? Death certificate, birth certificate, driving license, passport, visa are given to individuals. But why is it coming under services to business entities? Because these are services provided to business entities on behalf of their employees. A company is taking a Keyman insurance policy. They need birth certificate of a person, or claiming Keyman insurance policy. They need death certificate of a person. Or a company is sending their employees outside India, they need passport and visa services. Or a company is into transportation business and they have their employees as drivers. For the drivers, they are receiving the driving license, etc. So for that, these are the services provided to whom? To the business entity on behalf of their employees. So what are the 5 certificates which are exempted for? Birth certificate, death certificate, driving license, visa, passport. Then, consideration for tolerating an act. This example already I told you. That is, TASMAC audit, state government. You enter into doing the audit and you breach the contract for which you need to pay damages, that is exempted. So, you enter into contract with the government. When you enter into contract with the government, so you have breached the contract for which you are paying the damages as per the contract. So that money collected by them will be exempted. Then merchant overtime charges under customs. Customs department will be working on all days except on public holidays like Gandhi Jayanti, Independence Day, Republic Day, like that. Except for public holidays, all other days they will be working, even on festive days also and Sundays also. As they are working on holidays and Sundays, so they will be paid extra charges to do the clearances because we need their services during Sunday. We can get their services. Customs department service means you imported the goods. You want to clear the goods from the customs on Sunday, you can clear, but for which you need to pay some extra charges. What is that extra charges known as? Merchant overtime charges. That charges collected by them is exempted. Then assignment of right to mine or explore petroleum, crude or natural gas against consideration in the form of profit petroleum. So there is a concept of profit petroleum and cost petroleum, which you can see in the next page. You can see in the next page, cost petroleum and profit petroleum. Have a look into that. What is this cost petroleum, profit petroleum? First, government will form a joint venture with the leaseholder. For example, Reliance Industries Limited. So they wanted to extract the petroleum, crude or natural gas. Now central government will enter into joint venture with Reliance Industries Limited. And under this joint venture, so Reliance Industries Limited will invest for generation of petroleum, crude or natural gas, and they will sell it. Now they get some revenue. Out of that revenue, they will recover their expenses. That expenses what they recovered is known as cost petroleum. Again, I am repeating. So production sharing contract between government and leaseholder, right to extract petroleum, crude or natural gas. Apart from royalty, government receive a share of profit from joint venture. So who forms the joint venture? Government and the leaseholder. So leaseholder example here, Reliance Industries Limited. Now they are generating some petrol or gas, okay, crude oil or gas from the basin, okay, and this revenue, so who is incurring the expenses? Leaseholder, that is Reliance Industries Limited. So they will recover that expenses. So that recovery of expenses is known as what? Cost petroleum. So they provide services to the joint venture. They provide services to the joint venture by way of incurring the expenses and recover the expenses from the joint venture, which is supply under 71AA. You understood? That is supply under 71AA. Any activity between a person other than individual and its members. Correct? Who is other than individual here? Joint venture. Who is the member of the joint venture? Leaseholder. So leaseholder provides the service to the joint venture and collects the money from the joint venture. So for his expenses, that is known as cost petroleum, even though it is supply under 71AA, but it is exempted. Clear? So this joint venture is exempted. So cost petroleum. Then next. So from revenue, we take out the cost petroleum. And what is the benefit government will get? Government will get two consideration. Number one, royalty. Number two, share of profit. First, they will take royalty. That royalty will be taxable. Why, sir, royalty is taxable? Please go to the above list and see fourth point. Assignment of right to use natural resources, even assigned before 1/4/2016. What is exempted? Only one-time charges is exempted, but annual royalty always taxable, correct or not? So annual royalty will be taxable. So government gets annual royalty, that is taxable. Now from revenue, if you take out annual royalty and cost petroleum, the balance is known as profit petroleum. In this profit petroleum, a percentage will go to the leaseholder and a percentage will go to the government. That percentage received by the leaseholder is not a supply because he is investing and taking the profit from the business. I told you profit is not a supply. Is it clear? Then whatever money received by the government, profit share is supply. Why? They are not investing. Pa, who is investing here? Pa? Leaseholder is only investing. Then government is not investing. Then why are they getting profit share? Because they gave the right to extract crude oil. So for that it is supply and it is exempted. So what you need to remember? You need to remember 4 points here. First, cost petroleum. What is cost petroleum means? Recovery of expenses by the leaseholder. Taxable, exempted. Exempted. Super. Then next, annual royalty collected by the government. Taxable, exempted. Taxable. Share of profit received by the leaseholder. Not a supply. Share of profit received by the government. Exempted. Okay, pa? Once again. Cost petroleum, recovery of expenses, exempted. Annual royalty collected by government, taxable. Share of profit received by the leaseholder, not a supply. Share of profit received by the government, exempted. So that is what you need to remember here. So that is this point. So assignment of right to mine or explore petroleum, crude or natural gas against consideration in the form of profit petroleum. Then guarantee commission for guaranteeing the loans taken by public sector undertaking. So public sector undertakings will take some loans. Those loans are guaranteed by government. As government is guaranteeing the loan taken by PSU, so government will get some commission from the PSU. So that commission received is known as guarantee commission, which is exempted. Then services provided by state government to excess royalty collection contractor by way of assigning right to collect royalty. So variable royalty is exempted. Sir, what is this excess royalty collection contractor, etc.? You can see in the next to next page. I have elaborated there in page number 119. GST implications on excess royalty collection contractor. Say this. State government of Andhra Pradesh has assigned the right to extract natural resources to Messrs. Reddy Brothers. For that, what Reddy Brothers should pay? Royalty. How much is that royalty? 10,000 rupees per ton. Now, what is this royalty? Variable royalty. Why variable royalty? Suppose if they extract 100 tons, 100 into 10,000. If they extract 80 tons, 80 into 10,000. So what is the type of royalty that they will pay? Variable royalty. Correct? Now, government needs fixed royalty. Government needs fixed royalty. So they will appoint one person called as ERCC, excess royalty collection contractor. What this excess royalty collection contractor will do? They will collect variable royalty. They will collect variable royalty and they will pay fixed royalty to the government. Understood or not? So for example, they collected variable royalty 50 lakhs and they paid fixed royalty 60 lakhs. Now on this 50 lakhs, anyhow Reddy Brothers will pay GST under RCM. Why? Services provided by government to business entity is covered under RCM. So therefore Reddy Brothers will pay GST under RCM on 50 lakhs. What is the total money government got? On that 50 lakhs already GST paid by Reddy Brothers. So ERCC is required to pay GST on what? That is the point. ERCC even though is paying 60 lakhs, but they need to pay GST only on 10 lakhs. Why they need to pay GST on 10 lakhs? Because on 50 lakhs anyhow the leaseholder is paying. Suppose if the variable royalty is 65 lakhs and fixed royalty is 60 lakhs, then no GST payable by ERCC. Why? Because on 65 lakhs already Reddy Brothers is paying GST. Is it clear? Sir, but 5 lakhs extra he paid, he will get refund. No, no refund. If it is shortfall, you pay. If it is excess, you will not get anything. Come on, we are dealing with government. You understood or not? If it is shortfall, you have to pay. If it is excess, you will not get any refund. Okay. So, therefore, ERCC is exempted to what extent? ERCC is exempted to what extent? To the extent of variable royalty. So, only on the difference they need to pay GST. That is this. So, services provided by state government to excess royalty collection contractor, variable royalty is exempted. Then, national permit or state permit charges for vehicles. Like whenever a vehicle is going through a route, one state to another state, they need to get a national permit. For that, they need to pay permit charges. So, that permit charges collected by government is exempted. Then, previously we had FSSAI charges collected from food business operators like that. That point is not there now, which means it will be taxable. These are the 14 services which is exempted. Okay? Apart from this 14 service, if these 14 points are seen in the question, exempted, fully exempted. Apart from these 14 points, you need to see 2 general exemptions. If it is covered under these 2 general exemptions, then it is exempted. Otherwise, it will be taxable. Look into the first general exemption. Services provided to a business entity whose aggregate turnover during the previous year does not exceed 20 lakhs or 10 lakhs threshold limit, but this is not applicable in case of renting of immovable property. Concentrate, listen. I have started one advertising agency this year. Please listen, pa. I have started one advertising agency this year. This year only I have started. Now I received services from government by allowing me to place the hoardings on the roadside. Roadside and all I can place the hoardings. For that I have to pay money to the government. Anywhere this hoarding charges is covered under the specific exemptions. Check in those 14 points, anywhere it is covered. Permitting a person to place the hoarding, some money is collected, anywhere covered under 14 exemptions? No. Now, therefore I need to refer general exemption. Now, what is my turnover during previous year? 0. Because this year only I started business. So, the services provided to me will be exempted under first exemption. Is it clear? Services provided to business entity whose aggregate turnover during previous year does not exceed 20 lakhs or 10 lakhs, but this exemption is not applicable in case of renting of immovable property. Suppose if I take an immovable property on rent, this year only I started business. Whether this exemption is applicable? No. Now, second general exemption you see. If the value of supply does not exceed 5,000, for example, Taj Coromandel, so he is taking services of Police Department of Tamil Nadu for providing security in the weekends outside their hotel premises, for which they need to pay 4,000 rupees per day. Okay. Now, so is the security services anywhere covered under 14 specific exemptions? No, not covered under 14 specific exemptions. Will it come under first general exemption? No, because Taj Coromandel turnover during the previous year, definitely it will cross that 20 lakhs and all. But it is covered under second general exemption. What is the value of supply? It does not exceed 5,000. How much I said? 4,000. It does not exceed 5,000. Therefore, it will be exempted. Clear here? Whether both conditions should be satisfied or any one point is okay. Any one point is okay. Can you tell me what are the two general exemptions? Come on. Services provided to a business entity whose turnover during previous year does not exceed threshold limit for registration, but that is not applicable to services by way of renting of immovable property. Second general exemption, value of supply does not exceed 5,000. Suppose if a service is not covered under specific exemptions or general exemptions, in balancing cases, it will be taxable. Wherever it is taxable, it will be chargeable to GST under RCM. Correct? But one exception. What is that one exception? Renting of immovable property service to an unregistered person will come under FCM. Otherwise, everything will be RCM. Understood? So, that is with respect to this. And we have completed government services. Services provided by government. So, we will take a break and we will meet at 2 o'clock. Okay, take 1 hour break, but I want you to, don't sleep afternoon, because we have remaining exemptions. We will complete. So today exemptions will be over and we will be starting with value of supply also. Okay.